Good evening and welcome to everybody here and joining online. First, can we have the housekeeping notice from the Democratic Services?
Thank you. Please note this meeting is being recorded by the Council for live broadcast and will be published on the website for a minimum of 6 months. The meeting may also be recorded or streamed for live or subsequent broadcast by members of the public, although ultimate discretion in this matter lies with the Chair. For those in the room, please note if the fire alarm sounds, please exit the building by way of the nearest available signed fire exit route and make your way to the assembly point in the front car park of this building. Finally, please ensure background noise is kept to a minimum and mobile phones and other devices are turned off or switched to silent for the duration of the meeting. For those in the room, this includes turning off mics and turning the volume down completely on your laptops. Thank you.
Thank you very much. Now, please could you tell us apologies for today?
We've received apologies from Councillor Stephen Bartlett and Councillor Vicky Slade, and substitute members, Councillor Oliver Walters is substituting for Councillor Slade this evening.
Thank you. Councillor Phipps.
I'd just like to say that I need to leave at 9 o'clock. Thank you.
I'm not sure I can promise we'll be done by then, but we'll do our best. Thank you. And welcome, Councillor Walters. So, item 3, can I check if any councillors have any disclosable pecuniary interest or any other interest on any items on the agenda today? Councillor Tarling.
Yeah, I don't think it's pecuniary, but I am a member at Two Rivers Meat Leisure Centre, but I think that's as a member of the public, so I don't think there's any disclosable interest there.
Thank you for sharing. Any other councillors? Okay, moving on to item 4, confirmation of minutes. Thank you for sharing the minutes to the last meeting on the 27th of November. Do we have a mover? Well, first of all, do we have any comments on those minutes? And do we have a mover? Thank you, Councillor Waite, and a seconder. Councillor Tarling, thank you very much. Do we have consensus to agree those? Excellent, right. Oh, this, I should be clear, there is also the minutes from the 3rd of December. We took both minutes together. Can I take it that your moving and seconding was for both minutes? And we have agreement on both. Excellent, thank you very much. Right, let's move to item 4, which is the action sheet. Now, this is just to remind those listening, this is something that as a committee we've brought in to try to make sure that we follow up some of the items that come up in the course of discussion. And it's intended to be a sort of working document to support our work and prompt our memory. But I think it is useful nonetheless. I won't go through every item. Some of the items are future places. As you know, that's underway separately, and I will be in touch with committee members by email, but there'll be a future item on that. Looking through number 66, the external auditor annual report value for money arrangements. This is something I think we might be able to close down. The first question is to liaise with the CFO on whether more regular value for money updates will be required. This is a suggestion in light of some of the financial challenges. And the second is to review the DSG chart on page 20 of the value for money report to make the comparative data more meaningful. And I think on the first one of those, I think we're going to leave that for now and take stock of that after we've heard the update from the CFO on the DSG. I think that should be in the meeting after next, the March meeting. Whereas the chart 20, the chart on page 20 item on the DSG, I think that was one for you for the external auditor. Barry, if you'd like to comment on that.
Thank you, Chair. So it was a great suggestion. Thank you very much. I fed that back to our National Value for Money team, and we'll look to make the changes for the comparisons for next year. Given the progress of the audits at this stage, we won't be updating the current chart for this year, but we will incorporate it into the reviews for 25-26.
Thank you very much. So hopefully a number of those other items, they are going to move to closed or underway by the next meeting, but please do anyone get in touch if they want to find out where we are with any particular ones. Did anyone want to come in on that action sheet before we move on to public issues? As always, it's just intended for us as a committee to keep track of all the various actions that members have suggested, so please do. Please, the independent member, Lindy, online, please do come in.
Good evening, everyone. I've got a question. I'm just skipping the ones without the comments. On page 34, this is a specific issue I brought up in the last meeting on point number 24, the Risk Management Corporate Risk Register update for the risk owner on how risks are communicated to the public and circulate the response. So this was the exact same comment from the previous, well, since July 2025. And in the previous meeting, I specifically highlighted this issue. Who's humming? I specifically highlighted this issue as it's been outstanding, and it's still outstanding. So I don't know what's the use then of the action list if it's not being, comments are not being taken into account in the meeting. And then on point number 21, the TBC, if something can be written in there, an accountable person can be attributed to that point for the next meeting. And then I just wanted to know about the landing page, point 18, if any progress has been made on that. Thank you, Chair.
Thank you very much. So I can speak to some of those. So on the landing page for future places, that is, we will consider that at the when we next discuss future places and make the formal recommendations. So we'll come back to that then. The information governance point, that is going to be addressed when we consider the next year's internal audit plan and the forward plan, which we need to discuss as of the committee. And so we can decide when that will next come to us at the committee. And then risk management, the update on CR20, can I propose that we raise that when we discuss the risk register later on this meeting? I think that's a fair point. Thank you. Right, public issues. Now, I believe we don't have members of the public here to ask the questions and give the statements today. So I believe I'm handing over to Democratic Services to read them out. Thank you.
Thank you, Chair. There is one public question from Mr. Ian Redburn on agenda items 7 and 15. To assist residents' understanding of the Audit and Governance Committee's assurance framework, I would welcome clarification from the Chair on the respective roles of internal and external audit. Based on the Public Sector Internal Audit Standards, SIP for guidance, and the NAO Code of Audit Practice, material previously shared with you, could you clarify whether internal and external audit functions are expected to operate proactively as early warning mechanisms or primarily reactively, reporting issues once they have fully crystallised? In particular, when governance weaknesses, unclear commissioning, or control gaps begin to emerge within a high-risk projects, what is the expectation on each audit function to ensure concerns are escalated promptly to senior management and to this committee, rather than relying on assurances or retrospective reporting?
Thank you. Internal audit in BCP Council worked to a risk-based audit plan carefully designed to prioritise scarce resource and to obtain evidence through testing in its various forms, to form judgment and make recommendations to mitigate risk and assess the adequacy and effectiveness and efficiency of systems and controls. This results in both proactive and reactive audit coverage. For example, testing may identify a weakness or deficiency that may allow something negative to occur, but further testing shows that the negative event has not actually taken place. In this case, the audit work is proactive, and implementation of audit recommendations should prevent it ever happening. Similarly, testing may identify a weakness or deficiency, and consequently something negative may have actually occurred. In this case, the audit work is reactive, and implementation of audit recommendations should result in no reoccurrence. On a very common everyday basis, internal audit in BCP Council will offer advice and support to colleagues within the Council, for example on general matters of control, governance and interpretation of financial policies. On some rarer occasions, internal audit in BCP Council will provide formal consultancy advice on a project or programme, and such consultancy work is reported to the A&G committee as and when it takes place. An example may be the implementation of a major new financial system. Both internal and external audit work to professional standards which require timely reporting. In practice, this means that if a matter is identified and determined to be sufficiently significant, audit functions would report the matter to senior management and to Audit and Governance Committee, usually within the existing reporting framework, such as a quarterly update report, or in the case of internal audit, or auditor's annual report or audit findings report in the case of external audit. In exceptional circumstances, an ad hoc report may be produced at any time.
And there are 3 public statements from Mr. Philip Gattrell on agenda item 6. Statement 1, material misstatement of council's net bank balances at 31st March 2025. Background, my preceding statements to this committee, 27th November 2025, 1 and 16th October 2025, 3 refer. The draft positive bank current account balance of £4,794,000 was in reality a £21,429,220 overdraft comprising 3 designated accounts. Payments overdrawn £9,871,692. Unprocessed income overdrawn £12,806,424. Processed income positive £1,248,896. Net overdrawn £21,429,220. Cause. The misstatement arises from a failure to apply fundamental double entry synchronicity at the 31st of March 2025 accounting cutoff, as notified in my preceding related statements regarding incongruous reciprocal negative cash held balances. Remediation. This has been corrected on accounts finalisation as confirmed by the external auditor, although omitted from their audit findings. Doubtless the committee will discuss in depth with finance officers as to why this concerning error escaped recognition when publishing the draft accounts. Members should also consider how the overdraft compares in future financial sustainability terms with the 2024-25 £100,000 facility. Statement 2. Bank funds, 31st of March 2025, unresolved concerns. Council's processed income. There is an overall £352,053-96 balance reconciliation discrepancy. Spreadsheet scanning identifies irregular cell entries altering column T's correct total per the column B row 38 cell formulae for £1,246,048.80, awaiting banking items £1,422,075.78 and awaiting service report items £176,026.98. Those items define not uncleared bank lodgements but debtors at 31st of March 2025, by nature additionally indicating potential irrecoverable amounts. 3. Deputyship accounts, £52,618.91. The external auditor has not responded under section 26, but I deduce no breach of trust is deemed because available funds are assumed throughout, contradicted however by council's year-end net negative liquid resources. No interest was applied equitably, notwithstanding Trustee Act 2000. 26. Autonomous school bank balances, £1,446,930.00, treated as part of cash held. Council's mandate enables interest sharing. Likelihood of interest received and methodology are unclear. I have not received corresponding reconciliations. I gather the external auditor verifies these. Statement 3. External Auditor's Action Plan, pages 85. My 27th of November 2025 Statement 2 references Section 26 questions, which included fixed assets, where the auditor has not responded. My 16th October 25 Statement 3 notes vulnerable mobile IT equipment as a material concern, as corroborated by information regarding not fully integrated general ledger accounting and consequential physical assets directional testing limitations. On 6 November 2025, total cost £5,918,917. There were a recorded 7,021 laptops and tablets and 2,840 phones. 86. Section 26 electoral custodians of the custodian rights are relegated to medium risk. My 16th October 2025 statements disagree with deference to law and case precedent. This writer's preceding statements today demonstrate the safeguarding actuality. Management's response emphasises officers' time. Conversely, a 2025 FOI first-tier tribunal decision illustrates there were respectively only 3 and 2 Section 26 requesters in 2 recent years. The responses were overdue. In one instance, no response. My 24 July 2025 statement 1 refers. There's a statement from Mr. Ian Redman in relation to agenda item 10. The Two Rivers Meet Studios proposal reflects weaknesses seen in previous council projects such as Future Places and the Durley Chine Environmental Hub, which in hindsight clearly lacked sufficient assessment of risk and evaluation of alternative options. The appraisal appears limited, with physical expansion treated as the default solution. The report does not provide a rigorous assessment of alternatives, such as using a temporary structure, reprogramming existing space, partnership use of nearby facilities, modular or phased expansion, or the use of vacant shop units in the town centre that could support studio activity while contributing to regeneration. These options could help test whether demand genuinely exists without committing to upfront investment. The report also lacks clear best and worst case financial scenarios, including consideration of market competition. I ask the committee to pause this proposal and require a more robust appraisal, as there is no urgency for this decision. And there is a statement from Mr. Alex McKinstry in relation to agenda item 6. Re-external audit findings, page 86. It may be true that all requests to inspect the 2024-5 accounting records were replied to before the statutory deadline. I should point out, however, that my own request was answered 2 days before that deadline, leaving very little time to query or object to the accounts, rights conferred by sections 26 and 27 of the Local Audit and Accountability Act. This is still a vast improvement, however, on previous years. Regarding the managerial comment, also page 86, that these requests are time-consuming, I can only say there is no ceiling on the accounting records an elector might inspect, as established in the Moss case 2021, and that the ability of local taxpayers to hold their authority to account is a precious democratic right dating back to 1844. Finally, copious thanks to the external auditor for putting this matter under review.
Thank you very much, and thank you for reading at such length. That's appreciated. Right, let's move on now to item 6, which is the External Auditor Audit Findings Report for 2024 to 25 and the Statement of Accounts for 2024-25. Now, I believe this is a combination presentation from our Assistant CFO as well as from the External Auditors directly. So shall I hand over to Barry first? Mr. Morris, thank you.
Thank you very much, Chair. So there's a triumphant of us here this evening to present the report. So Katie is the audit manager and Adams is the in-charge auditor. So Adams has worked on your audit for the last 3 years and he has requested to see where the sharp end of the business comes and where all the glory gets taken. So we've agreed that Adams can come down and he's going to lead some of the presentation. I think my role has principally been delegated to the driver to bring both Katie and Adams down here. I just want to say that the audit, before I hand over to Katie, the audit is substantially complete. The audit findings report that is in front of you has not been fully updated with all the audit findings that have been identified, and indeed one of the public questions or public statements has identified that. That's because we received the final version of the statement of accounts similar time as yourself, so we need to go through those and make sure all those adjustments have been updated appropriately. What we will do, of course, is provide the Audit and Governance Committee with a final version of the audit findings report once our work has been completed. That will also include the final fee once we've completed that work and agreed those numbers with Adam as your Section 151 officer. We are intending to issue a disclaimed opinion again. Now, the reason for that is because we've had a disclaimed opinion in prior years. So we're 2 years down now where we've actually had 2 full audits done and completed. So actually you'll hear a lot in the sector talking about rebuilding assurance. and BCP is in a positive place, that actually we are rebuilding that assurance in quite a positive way. However, that does still mean, because we haven't got those assurances over those opening balances for the year that was not audited, we're unable to move that disclaimer. Now, I would emphasise that MHCLG, as well as ourselves as a firm, are keen that that disclaimer gets removed at the earliest opportunity. We are risk assessing all of our authorities to make sure where there is a disclaimer, we move to a clean opinion as soon as we possibly can. And again, I would just emphasise that BCP is in a very positive place. I'd like to hand over to Katie now, who will take you through the headlines, and then Adams will do a little bit of the detail.
Thank you, Barry. So as Barry mentioned, we are currently finalising procedures in a small number of areas of the audit. This includes our internal quality processes and ensuring that all of the audit file has been subject to the appropriate quality review. We also will need to do our final review of the financial statements to ensure that all audit adjustments have been adjusted appropriately. However, we are looking to finalise our work and issue our opinion by early February. So the majority of the work now is with us rather than with the council, for us to finalise our work and our review. We have documented in the report some improvements that we've seen this year in the audit process compared to prior years. So I just want to say thank you to Matt and his team for that. We've had some good level of support from finance this year. There were a small number of areas where delays were faced, but we will work with the council again next year to try and improve on those. We are going to plan for an earlier sign off next year to prepare for the backstop deadline coming forward. So we're hoping that by the end of November next year that we will be in a position to be signing off. So we'll work with the council to ensure that we can get to that place next year. But we have had improvements this year, so we're moving in the right direction. As Barry mentioned, this is a disclaimer audit, so you'll notice in the throughout the audit report there's a lot of comments that we aren't able to actually conclude on overall assurances on different areas because we are giving that disclaimer opinion. However, what we want to bring to your attention tonight is around where there is any particular issues that have come to light, or more importantly, that there isn't anything significant necessary to bring to your attention. If I can take you to slide 13 of the report, this is just where we document our approach to the group audit. So we hadn't identified any significant issues with the group accounts. There was an adjustment required to the valuation of heritage assets, but nothing particularly significant. We have undertaken the consolidation review now, and it's just subject to our internal review processes, but the work is nearing completion on the group accounts. Actually, I think I'll pass over to Adams now. That's the next bit. Thanks, Adams.
Thank you, Katie. Materiality. So materiality is an important concept to us. It tells us where and which parts of the accounts to focus our audit work on. We have not changed the threshold we communicated to you during the presentation of the audit plan. So we maintain that, as we didn't identify any reason to change that. The next section is significant risk. So this tells us the various elements of the accounts that we identified as significant risk. So they include management override of controls, valuations of properties, pensions, and IFRS 16 implementation. On management override of controls, we did not identify any issues, and we have completed the work on that. Valuations of property, plants, and equipments. We have completed our work on it. It's currently undergoing final quality reviews. However, there is no significant matters that we are reporting to you. Valuations of net pensions liability. In the draft account, it was presented as a net pension asset. However, during the audit, we identified that the entity or the council had to apply IFRIC 14 asset ceiling, and for that matter, it drove the balance from an asset to a net pension liability. So if you see any change, it was because they had to apply a provision of the standard. Other risks identified, IFRS 16 implementation. Yeah, sorry. I omitted the part of our presentation where we said we were going to receive the pension assurance letter. We have received that from our pension fund auditor. So there is no further issues on that. Other risk included IFRS 16 implementation. This was not material to the accounts and therefore had no impact on the account. Other findings. This section also tells us, or is for us to report to you, other findings that we made. We want to inform you that we have not made overall conclusions on these matters due to we disclaiming the opinion, and work done so far has not identified any issues where we need to report to you at this stage. I'll hand over back to Katie. Thank you.
Thanks, Adams. If I can just take you to slide 32, which is our IT findings. We have specialist IT auditors who come in and undertake an IT audit for us each year at the council. As you'll see on this slide, they have identified some significant deficiencies and deficiencies. With those significant deficiencies, the ones shown is red, and in respect of Dynamics 365. We do provide management with a much more detailed report behind this table, so that they get an IT findings report, and that just goes into the detail of the issues identified, and also includes management recommendations which management have responded to in terms of moving things forward, and the IT team will come in as part of the 25-26 audit and understand how management have moved forwards those recommendations. As the audit team, we also have to consider those risks identified and ensure that our audit approach is appropriate to cover those. So, for example, within our journals testing, we adjust our strategy to make sure any risks that have come out of the IT work are taken fully into account. But we do undertake a fully substantive audit approach. On the next page, on page 33, you'll see some wording in respect of the new system implementation. I think we mentioned this at a previous committee, that it was one of the areas that was still outstanding at the time. We've obviously got some information there around some of the challenges faced. It took a lot longer for us to get to the end point in terms of our audit work on that new system implementation, mainly because the individuals who were responsible for the work left towards the end of the year, or around year end, and so some of that documentation and some of that follow-up reconciliations were done much later in the year and did take us longer to get to the bottom of. The main thing here is we've got to a point where we're able to say that the differences identified are not material in nature, and therefore, in terms of our financial statements audit, don't have a material impact on that audit. There are some lessons learned from this, and again, those are documented in more detail within our IT findings report, but have also been agreed with management. But it was a particularly complex migration in terms of the numbers of systems involved in putting them together. So further down to our report, page 39 onwards sets out the audit adjustments. So as Barry mentioned, these are the adjustments we've noted to date. This may get slightly longer when we do our kind of final review of the financial statements to make sure everything's included within here. Anything that's included within the first table of audit adjustments has been adjusted by management, and you'll see the biggest one there is the one that Adams touched on earlier, which is the adjustment to the pension liability, turning that from a pension asset to a pension liability. Essentially on that one, IFRIC 14 is an accounting standard, and where pension funds are getting closer to surplus positions or are in surplus positions, which is happening more now than it has been done previously, there's essentially an accounting standard which caps the amount of surplus that the council is able to recognise in its accounts, and in this case it has taken it from that asset position to that liabilities position. The initial report undertaken from the actuary didn't have that adjustment undertaken, which is why the change has been put through. But yeah, it's essentially a cap on the amount that the council is allowed to recognise in their accounts as an asset. On slide 41 of the pack, we have an unadjusted misstatement. This is, management decided not to adjust this because it's not material to the accounts. And then following on from that, we have all the kind of disclosure and misstatement adjustments. Won't go into that into too much detail. We then have an action plan set out on page 45 of the pack. This is where we set out our recommendations in terms of the audit, and management have responded to those recommendations. I think I'll pass over to Barry.
Thanks, Adams. Thanks, Katie. So the value for money report has already been shared with you as part of a previous audit and governance committee. And again, we will update that once we produce the audit opinion, and that will come through to the council for publication on the website and through to members for information. Katie's mentioned there the unadjusted misstatements. We will update that to see if there are any further unadjusted misstatements that need to be reported back to you. Our proposal is, as set out in the recommendation, that the authority, after questions from yourselves on our report and of management on the statement of accounts, is that the draft accounts are approved, subject to there being no further material changes being identified, and then delegated authority given to the chair to authorise the final version of the accounts to be signed for the audit opinion to be issued. This is standard practice as to where we are with most authorities, where the audit has not yet quite been completed by the time of the audit. I would emphasise that should there be any material changes being identified, then that will require a further audit and governance committee to be convened as an extraordinary committee. So we would liaise with the chair and with your section 151 officer if that is the case. It happens very rarely, but just so you know that provision is there, so that there will be no material changes that you weren't aware of. Chair, happy to take any questions.
Yes, I was going to suggest we pause there and ask questions of you before handing over to the Deputy CFO to talk about the statement of accounts. And thank you for that, for presenting. That was really clear. Thank you. A few questions just to start off from me and then open to others. On disclaimed opinion, could you talk a little bit about how this differs from what was expected? Because we talked about this when the backstop was first discussed, about not being able to validate the reserves at the start of the year and how that was going to have a knock on. Is there an element to which this is just foreseeable from that, or was it that you were hoping to do a bit more on getting assurance on the starting position?
Yeah, so a really good question. The reason we've got to the position of having disclaimed opinions is because the government, quite frankly, got to a position where there were so many sets of accounts that were outstanding and hadn't been signed off, but we just had to draw a line to start closing audits down to enable us to get back up to date. And you'll know that the backstop date this year is the 27th of February. Next year it comes to the end of January, and then it comes forward to the end of November going forward for 26-27 onwards. I'll come back to that in a moment. Now, actually, once you've had the disclaimed opinion issued, it's a bit like you can never, unless you go back and do a full audit, then you can never regain that assurance because you don't know what happened to the income and expenditure in that year. You don't know what happened in relation to those reserves. Now, in many respects, whilst it's unfortunate the BCP is in the position that we had to get to that place, it is in one of the best positions that you could be, because you've only got that 1 year of disclaimed opinions. You've got 2 subsequent full years where we've got all audit assurance, and what you're seeing is that we've got, yes, there are some audit adjustments that are going through, but we're able to make those, and the level of unadjusted misstatements are quite small. So from a risk assessment perspective, you're in a very strong position. There's an entity, there are several entities, but one that is on my patch where they've got 7 years of disclaimed opinions, and that's because they've still not given us a set of accounts for 2024-25 yet. So you'll see there's a vast spectrum of where you're going to be. So we are working with MHCLG, our regulators, the local audit office when it's established in the autumn of this year, to determine what procedures we need to get to and how much comfort we need to have before we can move into an unmodified position. Chair, if I may, just going back to that backstop position, we're bringing these accounts to you and our audit findings report in January. If we were in next year, we'd be getting close to the deadline. And if we were in 2 years' time, we'd be after the deadline. So next year, the firm has said we want to accelerate our delivery, and our aim is to make sure that all audits are completed by the end of November. So this is our last dry run, really, to try and get us there. So we are hoping that everything will be brought forward so that we get back to more timely reporting.
Thank you. Councillor Tarling.
Yeah, forgive me. My brain hasn't completely switched on at the start of this. It seemed to hit it straight away. Just the timeline. You mentioned the timeline for sign off. Could I, maybe for you, Chair, but some clarity on this? What is the timeline for this signing off this report?
Sorry, yes, please do.
Thank you. So through the chair. So ideally what will happen is you will ask your questions this evening. You'll be satisfied with the responses from both ourselves and then from your questions on the statement of accounts, so to get you to a position where you're reasonably comfortable that the draft financial statements and the audit findings report that we've presented here give you sufficient assurance to approve the accounts, subject to there being no material changes. If there are no material changes, we then ask for delegated approval for the chair to approve those accounts. If there are some small adjustments that go through, which there probably won't be, because if they're not material, then management tend not to make them, then we are able to conclude our audit, and we would look to be issuing our audit opinion in the first or second week of February.
Thank you. Just going back to my last question again, if there's no assurance over the closing reserves balance for this year, what does that mean for the possibility of not having a disclaimed opinion next year? Do you think we can still hope for a non-disclaimed opinion next year?
I don't think we're going to get there for 25-26, but we are working with, as I said, the government and regulators to see what work we need to do to get there. We're trying a number of different approaches as a firm. So everything from doing more limited focused procedures to actually, for one smaller entity, a fire authority, we actually redid the whole audit because they were prepared to pay for a full audit to be undertaken so they could move that disclaimer. We don't think that's the most efficient way forward for a council the size of BCP. But like I say, you're sort of at the front of the queue to get to the place where we have an unmodified opinion as soon as we can.
Thank you. I think that's really helpful for us to remember for next year. You know, more assurance, but still that disclaimer. But then hopefully after that, you'll have built up sufficient assurance. Thank you. I've got the independent member Lindy online. Please do come in. Oh, I think you're still muted.
Thank you. On page 4 of the agenda, it stated that Grant Thornton anticipates providing an unqualified audit opinion on the financial statements for the council. So when I read that, I thought that it's a Christmas miracle that we're going to have an unqualified audit opinion. I was very happy. But this made to hear then that it must be a typo. So if we could just maybe then fix the agenda to correct the probable audit opinion to a disclaimer. On page 73, I wanted to know about the IT report. When is that anticipated to be coming to Audit and Governance Committee? I've got a couple of questions, but if that report is still coming, I would rather then hold on to my questions until the details are tabled at this committee. And then my last question is on page 80. It's on the heritage assets adjustment of 6.9 million. So it says that the heritage assets valuation is adjusted due to a revaluation adjustment incorrectly processed. So I just wanted to know, is this a journal error, or is this due to a difference in opinion from the external auditors on the revaluation of the heritage assets? Maybe the method that was used is different, or there's a discrepancy between what the external auditors got and what council got, or was it just literally a journal incorrectly processed? Because it's quite a significant amount, and if I remember correctly, the previous audit report, there was also quite a big adjustment on the heritage assets, if I remember correctly. So what is that adjustment about? Thank you, Chair.
Thank you. Please.
Thank you. So your first question around the IT report, management don't usually bring the IT findings report to audit committees. I think the view is often that there is some sensitive information in there where there's things such as there could be stuff around kind of password protection controls or things that maybe seem to be sensitive to be out in the public domain. So they don't usually come to audit committees. However, there may be another route for that information to be shared. I don't know, that would be kind of management's discussion with you in terms of that.
Thank you. Councillor Tallon, did you want to come in on that?
Yeah, I think our independent member touched on one of my questions, and exactly that point I was going to make is we don't really want the audit to say where all the weaknesses are in any of our IT systems. I think what we'd want to see though is that our head of IT gives us a response to that report saying that these issues, and it may be in a closed session. So I agree. I don't think it's something not for public session. But I think we would, at the point of when we get this finalised, I would like to see that we've had a response from the relevant officer to say that it has been closed out and that we have confidence in that. I think we can trust our officers to do that without any of us members needing to know the actual details of what the findings were.
Thank you. And doing some sort of closed session on that and cyber security, I think is something we should think about at some point. Please, Deputy CFO.
Through you, Chair, we're happy to circulate that finalised report with the committee members, and it does have management response from both finance and IT to give you some assurance about the action we're taking.
Thank you. Did you want to come back on the second part of the question?
Thank you. The second question around the adjustment to heritage assets, this was purely a human error adjustment. So it was that the incorrect figure had been picked up and put through the account. So this was no kind of issue in terms of the actual valuation of the heritage assets. It was a human error, which I think the council actually picked up from their review as well. So it was, yeah, purely a human error that's been corrected.
Thank you. Councillor Walters.
Thank you. On the IT section where it mentions technology acquisition, development and maintenance, is that a referral to the process with which we purchase new IT solutions? Or is it a review of our contracts to let us know whether or not we're getting good value for money in our investments in Dynamics?
Sorry, so I'm just getting to the page. So it's not looking at the value for money elements, it's looking at how those new systems have been implemented within the system.
Thank you. Did you want to follow up, or does that answer? I had a question on the pension being a liability, not an asset. So the issue was that it hadn't been identified that there was an asset ceiling in place that needed to be incorporated into the balance sheet, and as such, it was actually a liability rather than asset. Does that reflect any wider issues around the interpretation of IFRIC 14 or any other issues around that that expertise, or do you think it was a one-off kind of error?
So this has become more of an issue in the last couple of years in terms of considering IFRIC 14 as the pension fund has come closer to that surplus position. So we had to consider it last year as well. So the council had to go back to the actuary to get an updated report which considered it. I think this year when the council requested their report from the actuary, This wasn't specifically requested, and so the actuary produced a report which didn't include this. That was then identified on review of the report. So I think the takeaway in terms of going forward is just making sure that the council have requested exactly the kind of full information, so they get that first time. So they prepared the accounts based on the understanding and the report they were given from the actuary, that actuary report didn't include the impact. So they then had to go back to the actuary to ask them to resubmit a new report which did include it. But it shouldn't be an issue going forward because the council now know exactly what they need to request from the actuary and the pension fund.
Just to add to that, and again, Katie is way too young to remember the days when actually many pension funds used to be in asset positions, and what we found, or what the accountancy bodies found, was that some entities then, both in the corporate and public sector, stopped making appropriate provisions into the pension funds, and that meant that those pension funds, or indeed even took money out of the pension funds to pay back into the shareholders, or to manage the sort of delivery of services. So what IFRIC 14 was implemented was to limit that practice and actually say you can't just look at the what it looks like the value of those assets are as of today's value, because they go up and down as we know, but you then have to look at what the future liabilities are going to be as a result of those contributions, and that's why it really limits it down, because it is quite a stark decrease between actually we know that today's value is this, but of course as we know that reflects what the current value is of those investments, which may go down in the future. So IFRIC 14 adds that much longer time horizon to make sure that you're not taking the benefit of the assets today at the expense of having them to pay future liabilities.
Thank you. Councillor Beasley, I think you were next.
Thank you very much, Chair. I've got two questions. They both concern pension fund. They're both questions that I asked, if you like, from the other side of the equation at the last Dorset Pension Fund meeting in November. So I just want to make sure that I get the same assurance from Grant Thornton this evening. So the first one is very much around the backstop dates, and your confidence that we will not be getting back into the position that we found ourselves a couple of years ago. I appreciate that Dorset have changed their auditors from Deloitte's to Grant Thornton, and the point I think I'm trying to make is, will there therefore be, without any mitigation, will there be an assurance you can give us that that working relationship will make sure that we don't end back in that position, particularly with these revised backstop dates, which are bringing the dates further forward year by year. Hopefully, you're going to tell me that the issues that caused those delays previously can be overcome and can, in fact, be worked towards to ensure they don't occur again. And I'll come back with my second question in a minute, if I may.
Thank you. So through the chair, a really good question. I want to try and answer this in a way that doesn't sound mildly threatening. So I'm the partner responsible for the PSA South team. The engagement lead that undertakes the Dorset Pension Fund audit reports into me. If they don't deliver the audit, then they have me to answer to in relation to making sure that we're getting back to backstop. Look, I've been an auditor for 35 years, and I didn't get into this profession to not give audit opinions on public sector accounts. I'm frankly embarrassed for the profession that we found ourselves getting into a position whereby there were so many disclaimed audits, or audits that weren't completed. As the firm, we are 100% committed to making sure that we get back to giving as many fully unmodified opinions as we possibly can. That requires a contract and a commitment from both sides, and BCP is one of those councils which we have worked with to make sure that the accounts are produced, delivered on time. We continue to work with them to produce high quality supporting evidence that we can then audit as promptly and efficiently as we can to ensure that we don't get back into that position. There have been other changes that are being made. A local audit office has been implemented to take over the regulation of external auditors and to oversee the quality of the work that's undertaken as well. I also have the fortunate position of being the PSA head and partner lead for audit quality. So I lead our relationship with all of our regulators, and I know the quality improvements that have been made across the firm to ensure that our procedures and our audit approach is now as robust as it can be. I can't give you a cast iron guarantee because I've got no idea what will happen in the future. And sometimes we talk to you about concerns that we have are over resilience on a small number of finance officers within a team. Katie and I work on another authority whereby a very long-standing member of the finance team left the authority, they retired, and there wasn't sufficient capacity or backfill to replace that. And that audit was supposed to be signed off in September and is still open now because we're just not getting that information. So we will continue to work with the authority. I will continue to put pressure on my colleagues to make sure that they meet their obligations and their commitments to make sure that we don't ever get back into a position where we were before.
Thank you.
Thank you, and thank you, Chair, for letting me come back. That is actually very reassuring. It's the best reassurance that I think I have heard during this long period of uncertainty. So rest assured, we will hold you to it, undoubtedly, should it slip. My second question is one which I think Mr. Richards may have comment on also, and it's with regard to the actuarial assumptions made by Barnett Waddington on behalf of the Dorset Pension Fund. Their assumptions for future liabilities, which can make a great deal of difference to the cost to the authority, as we all know. And I think what I was hoping was that you might be able to give a view as to whether or not these appear tighter than they have previously, and there may be good reasons for that having occurred, and perhaps whether Finance Officer Mr. Richards, perhaps in particular, has any comment to make in terms of the progress that we might be making in trying to negotiate those down.
So through the chair, there are many specialisms in the world of accountancy. Actuarial services is not one of mine, and therefore we defer to an actuarial expert. And actually what the NAO does is it procures the actuarial services from PwC, which then applies across all audit firms, both in England and I think in Wales as well as Scotland. So they look at the work of undertaken by each of the four main actuarial firms. And you'll see on page 30, we have a table whereby we compare the various assumptions that have been used by Barnett Waddingham and compare that to the PwC range. And what you see there is that in the main, your actuaries are sort of in the middle. On the longevity life expectancy, they are towards the upper end of some of those life expectancies, but in the others, they are in the middle of the range. So from our perspective, the actuary that you have procured have come up with assumptions that are within the range that we've identified and have been confirmed by our actuarial expert. So from our perspective, those are appropriate, and those are appropriate to therefore calculate what your net pension liability and your pension liability is going forward.
Chair, could I just come
Yes,
back on
please
that, please? So the PwC range, is that completely up to date, or is this historic? Because what I'm trying to drive at here, just to make it transparent, is whether or not Barnett Waddington have tightened up their assumptions, therefore made it more expensive for this authority potentially, unless they are negotiated back out. And is that PwC range actually comparing what they're doing right now with what PwC have put forward in your paper here tonight, or is there a time lag in there? I think you understand the point I'm trying to get to.
I do. So the PwC provide updated advice every year. So this is for the period up to the 31st of March 2025. So we are comparing the two, like, so your pension valuation is at the 31st of March, the PwC assessment and ranges is at the 31st of March 2025.
Thank you.
Please, CFO, please.
Thank you, Chair, and I think Councillor Beasley requested that perhaps I pass comment on this as well, in the sense that what we have to remember is that the pension fund valuations for the purposes of the accounts are slightly different to the actual valuations that drive our actual contribution rates on an annual basis. And last year we had the triennial valuation, and in November we received the view of the actuary as to what those rates should be going forward. I think the framework is that the authority satisfy themselves through me that those assumptions and that request by the pension fund are appropriately robust and challenged. And in order to exercise that, we've got external support supporting us with a conversation with Dorset Pension Fund and their actuaries, and that conversation has started in earnest, but is still ongoing, and we're hoping to try and resolve that before, if you like, the final budget for 26-27 is put together. Because, as Councillor Beasley we know, we're talking material changes to potentially that budget, depending on what the outcome of those conversations are. So, just to give reassurance, we are robustly challenging them in line with our requirement. It is an ongoing conversation. The assessment we come to is that Barnet Waddington tend to be prudent within the range of actuary valuations that have been carried out, and we know we also have a new actuary within Barnet Waddington carrying out that work, and therefore it's just about whether or not we've layered prudence upon prudence as part of that, that kind of approach. But we are, as I said, having an ongoing conversation, hoping to come to an agreement, which will then be factored into the 26-27 budget proposals and the proposals for the next 3 years.
Thank you very much. Oh, Councillor Wade.
I have a question on the what does it say? The asset ceiling for the pension scheme. I didn't understand it very well when you explained it, and I don't really still understand it very well to phrase my question. But I think the point of this meeting is to be accountable to the public, so let's just try and put it into intelligible terms if we can. So I understand, I think, that previously we had said that our asset position was this, and then you take off the liabilities, you have a net asset position, but then we've had to kind of put in this cap to reduce our estimate of our assets, and then therefore we're in a position now with additional liabilities. I don't know, tell me if I've understood that correctly. And it just, yeah, but then elsewhere in the report, I think like page 54 of the deck, I've read something that we're not putting enough money into the pension scheme to keep up with its ongoing liability. So it just doesn't make sense as to why we're capped on how much provision can be counted. And actually, has this money, was it sort of overstated from a reporting point of view, or is it now off book? Has it gone? Like, is it still there in the pension scheme? I hope that makes some kind of sense.
So through the chair, please don't apologise. It's really hard to get your head round IFRIC 14, and I won't profess to be an expert in it. It's basically trying to say the value of assets in the pension fund at a particular time, so at the 31st of March, will depend on what the value of those underlying assets are. Now, we know the pension fund has a whole range of assets, some of those level 1 and 2, which are invested in stocks and shares. So you can look on the BBC website and see what the stocks are valued as at today, and that's the price that will get recorded as at the 31st of March. Then you'll have some level 3 investments, which are more difficult, such as investments in investment properties, which really just depends on what value you get is when you sell it. So there's an estimate of what it is, and a whole range of complex financial instruments around that. Now, what IFRIC 14 is seeking to do is saying, whilst there may be a book value of an asset at a particular date, you have to recognise that in the longer term, there will be further liabilities coming through. So what it's trying to do is say, you need to make an adjustment to the asset base today to reflect the cost of those future liabilities that are coming through. So again, as we were just discussing, the various assumptions that are made around the longevity and life expectations of people, those will extend out to up to 30 years. Interestingly, if you watch them, they are coming down.
Question, but then wouldn't that just increase the liabilities? Why would that decrease the asset value?
Because
That's kind of how it's explained here.
Because you're trying to discount the current value of those assets that you've got now to pay for the liabilities that will be incurred in the future. So it's making sure that you've got enough money now, or you're not recognising money now, that you would then take, well, actually, I've got, I think in the case here, we've got £68 million of surplus. We're going to take that money out because we need it to be break even. But then a week or a year later, the asset values go down again, and they could go down quite significantly. And then the council would have to then make up that money, may have to put that £68 million back in again, plus more to pay for those future liabilities. It's a difference between current value and future liabilities.
And actually just come in there and say that we do have the opportunity to come back to you with any questions by email between now and finalising and seeing the final report, don't we?
I do have a filter on my email that blocks out anything that says IFRIC 14.
Understandable. But I was going to say at the end of this item anyway, we do have an opportunity as members just to send follow-up questions, and I hope we all take advantage of that. I think Councillor Armstrong, if you're finished, Councillor Waite.
Thank you, Chair. My question is with regards to the local audit reset and recovery implementation guidance that's mentioned on, it's page 50 in our report, but it's page 10 in your pack. And where I'm noting that you'll discuss our strategy for rebuilding that insurance in light of this year's audit as part of our planning, like for next financial year. I am wondering, because that looks like there is a bit of a change in the regime. Are we within the council? Is there the capacity and readiness? Do we have the resources and documentation to be able to meet those new evidence requirements? So along those lines, but also with regards to the opening balances, how will you as auditor verify prior year figures given historic delays? Will this increase complexity and cost around the audit? Do we have really robust systems in place to manage the valuation and actuary processes? And also in this, I'd like to note the issues with the housing benefit and IT delays. And given the past delays in being able to get those important papers and documents, what will we be doing to avoid any repetition of that? Thank you.
So thank you. So through the chair, as we've sort of said, that the process for regain assurance is, I don't know whether it's a slow path or not, that there's a range of different things that will eventually wash out. So there are some closing balances and opening balances that will naturally wash out. So if we think about the pension valuations, we know that there's a triennial valuation that's undertaken every year. We know that the valuations of the assets are undertaken at the end of each year. So those assets will quickly move through. So we will get to a position whereby it becomes a historic issue because actually it's been updated by updated valuations. And similarly with your land and buildings assets, those are revalued on a 5-year annual basis. So worst case scenario, you get to 5 years, they were revalued 5 years ago, they're now revalued 5 years, so they're up to date. So actually we've got certainty over those assets. Investment properties, they're valued every year, so again, they will wash through a lot quicker. The bit that we can't get that assurance on is those in-year transactions where there may have been transactions going into either usable reserves or unusable reserves. So what we're doing as a profession is trying to work out what's, frankly, the minimum amount of extent of procedures that we need to do to get sufficient, because we're not looking for absolute assurance, we're looking for sufficient assurance to say, actually, we've got enough historic knowledge built up over time and cumulative knowledge that, well, the council didn't know that we weren't going to be auditing those accounts, so they prepared the accounts to the best of their knowledge. We then didn't audit them, but we've then undertaken a number of subsequent years' audits. We haven't found anything suspicious in those. Now, would a reasonable man therefore say that actually we can get to a position where we've got sufficient confidence over those balances? But we need to make ourselves sure, because that's not just about me satisfying myself, it's about making sure that when the regulator comes to look at me and make sure that he doesn't want to take my house away from me, that I've got enough audit evidence to demonstrate that I've got sufficient assurance on the file. That's what we're working through. Now, the bit that I've said for BCP, you've only got that 1 year that's disclaimed. That's very helpful, because that's the best possible position that you could be in, and we can regain that assurance. You're absolutely right around the capacity of the finance team, because we know from this year's audit, it's been hard to get the audit done within the time frame. So we're continuing to work with officers to make sure that we can get that done in the most efficient way, and that's where we need to work out what those minimum extent of procedures are. I would also say that MHCLG has committed to making grant payments to help the rebuilding, the cost of rebuilding that. So again, the council has received some grant funding in respect of that, and further grant funding may be made available to pay for the cost of any work that will be done. But we're looking to get to a position of unmodified opinions as quickly as we can. Go back to the earlier comment that I made. We're not here to not give assurance over the statement of accounts. That gives no assurance to you, doesn't give assurance to your stakeholders, doesn't give assurance to your members of your public. So that's why we're trying to be really pragmatic and finding the way to come up with a solution. And as a firm, we're being very proactive with both MHCLG, with CITFA and National Audit Office and the LEO as it comes into formation, to make sure that we can find the most appropriate solution.
Just on the back of that, just a more general comment. Did you want to expand on your view of the adequacy of the resourcing of internal audit in general, and the function? Is that something you'd be able to comment on?
It's not something that we would comment on directly. Again, we look to gain assurance from the work that internal audit does, and if they identify any areas of concern, then we use that to inform our risk assessment. But the quantum of internal audit resources is a matter for the council, the committee and officers.
Sure. Thank you. Shall we move on to the statement of accounts part of this item, and we can come back if there's anything that refers back. Is that all members okay with that? Right, Deputy CFO.
Thank you, Chair. So I'll try and keep this as brief as possible, because trying to explain the statement of accounts in the space of 5-10 minutes is going to be quite a tall ask. So I'll try and
keep it longer as needed.
I'll try and keep it as succinct as possible. As you probably see in front of you, Appendix 3 to the covering report is the statement of accounts in its draft form. It's very lengthy and it's very technical, and so for a lame person to understand, it's a tricky document. And what I'll try and do is explain the reasons why it's so difficult to understand, because there's a real constraint that we have to manage between the accounts. And what I wanted to draw your attention to is page 128 of the audit pack. Sorry, not the audit pack, the report pack, which is the council's balance sheet. And this arguably is the main financial statement within the accounts. Most of you have probably heard of a balance sheet. And this sets out the council's net worth as at the end of March 25. You'll see at the very top line, we've got property, plant and equipment, which was £2.1 billion. And that's all our physical assets the council holds. And every 5 years, at least once, those have to be revalued by an external valuer who has to make judgments and assumptions about that valuation. You also see at the top half of the balance sheet, we set out the money that's owed to the council via debtors and creditors, what money we owe to other entities. And you'll see a bit further down, there's the pension liability that the auditors have referred to in their update. You can see there's a shift from 148.7 million deficit to 62 million deficit. So significant changes year on year. And that is all down to assumptions that we have to build into our accounting adjustments. In the lower part of the balance sheet, you'll see the reserves. Now, the key bit is the usable reserves. And as it says on the tin, they are usable to support service delivery. So they can support revenue and capital expenditure. And you'll see, compared to last year, they increased. And they increased for a number of reasons: unspent grants, Adam taking risk assessments of the unearmarked reserves, topping them up. Those are the key numbers that you need to understand in the accounts, because those are what we report as part of our outturn report and what we update in our quarterly monitoring to Cabinet. Unusable reserves below are unusable, as it says on the tin, and they are effectively the offshoot of accounting adjustments. And I'll try and explain that in a minute. But you'll see at the very bottom of the balance sheet, there's dedicated school grant adjustment account. And often we talk about the dedicated school grant deficit, and that's where it sits, on the unusable part of reserves, 113.2 million at the end of March 25. And the reason it sits there is because of a government statutory override. That means we can place it on that unusable element, and it's almost ignored to some extent. But that override ends. If that override wasn't in place, it would sit in our usable reserves. As you can see, it's a negative reserve, so it would eat into the reserves that are available for the council. By the end of this financial year, it would overtake our usable reserves, because they're estimated to be about 180 million deficit. So if I just asked you to go to page 125, so slightly further ahead, which is our what we call our income and expenditure statement. Sort of like a profit and loss that you might be familiar with in a private sector organisation. And you'll see at the very bottom of that statement, there's 113.8 million surplus for the end of March 25. Now, I think all of you know we didn't have a surplus at the end of outturn of 113 million. We had a surplus, but it wasn't 113 million. And the reason for that is because of the number of accounting adjustments that we have to put through in the accounts, which are significant. You can see just a couple of lines up, there's a £216 million adjustment to the accounts. That is in relation to the pension fund that we've been talking about. Now, this is where the conflict in the accounts exists. And if you go to the next page, it's called the movement in reserve statement. And what this statement tries to demonstrate is you'll see all our usable reserves and unusable reserves that are referred to in the balance sheet. And what this statement shows is all the accounting adjustments that we put in the accounts and all the accounting adjustments we then have to reverse. And that's a really key concept. So when the auditors present their findings, everything they spoke about in their audit findings report are accounting adjustments. They've gone in and they've gone out. They haven't impacted on the council's usable reserves. And that's really key. And that's probably the most assurance I can give you without going into a lot of detail in relation to the accounts. So I'll stop there, Chair. Happily take any questions.
Thank you. So, first of all, I think if we want to come back to you with specific questions on any of the line items, any of the tables, could you talk us through about when the window to do that reasonably is, so that we're aware that what we as members can do if we have follow-up questions today?
The window will be open until the auditors are satisfied that there are no material changes and have effectively signed the accounts off. So early February, I think Mary referred to. So a couple of weeks at least.
Thank you. So any members would like to jump in first? Thank you. Could you just expand a little bit for us in kind of layman's terms what you think is most sort of surprising or interesting about this year's statements compared to other years? I don't know if that's an unfair question, but you know, what would you, if you were to describe what is the sort of the key story of this year, how would you put it? So I don't mean to put you on the spot in an unfair way, but just for us as to stand out, what kind of strikes you as this is unusual, this is different?
I'm not going to come in with regards to what's specifically unusual because I'm not too sure there was anything significant in that regard. But I think it's fair to say that the current administration has been very keen on trying to restore the financial sustainability and health of this organisation. And I think they have been taking steps to do that. You know, a positive financial outturn again for 24-25. The reserves, unearmarked reserves, which is what Matt referred to, have over a period of time been increased. You know, I think the recognition is the millstone around our necks in regards to DSG deficit. You know, and the impact that is having year upon year upon year with regards to the services that we can deliver to our community. And I think that comes out within this and what Matt's already said, but also with regards to, you know, the financial monitoring for this financial year and the budget for 26-27 when it's delivered, I'm sure will be reflective of that as well.
Thank you. Yes, Deputy CEO.
For you, Chair. I suppose a couple of things perhaps to highlight, which are kind of a theme for audit and governance, is we mentioned dedicated school grant deficit, which means our short-term borrowing increases. So you'll see the top half of the balance sheet, our short-term borrowing went from 45 million to 123 million in the space of a year, reflective of that servicing of that deficit. We did mention the pension earlier. When we did the initial draft accounts, we actually had a pension asset, which was, you know, unusual in itself because there's big shifts in some of the assumptions of that pension. But since then, it's because this IFRIC 4 ceiling, it's now gone back to a liability. So, you know, it shows how the significant shifts that can happen in the space of a year.
Thank you. And how did you find the putting together of the statements this year? Were there any challenges in the way? Was there any aspects to it that was particularly difficult? I know we've talked about valuation of assets in the past, but you know, any areas that were more tricky than usual?
Yeah, through you, Chair. So probably the biggest challenge was dealing with the new revenues and benefits system, which came in November. So it came in partway through the year. So we originally had 3 system databases that came into one, and trying to manage that from a sort of reconciliation perspective was a challenge. But going forward, it is on one database. We'll have one report, so it's much more straightforward to produce the accounts based on that.
Thank you. Any other members need to come in? No. I mean, it strikes me that, you know, without going into detail, which probably isn't appropriate for discussing at the meeting, and we can go directly to you with questions on specific items. But it strikes me that what comes through is the same messages that you've been highlighting, kind of consistently all year. So I suppose, to put my first question a bit differently, is there anything that you think maybe a lower level of materiality or significance that maybe we wouldn't have discussed to date? Would you say anything kind of interest stands out sort of below the level of interest of, you know, the scale of the DSG or the pension liability? Nope, there's nothing particularly stands out. Okay, well, I mean, we could, there's a lot of questions we could ask to sort of unpick in you know, what's going on in specific areas, but I think yeah, based on that materiality point, I think we probably draw it to a close there, unless any other members wanted to come in. And any questions? Fair enough. Thank you very much. We will come back to you before the accounts are finalised with any further questions, and similarly to the external auditor, if there's any follow-ups we wanted. but the key point is that this is the anticipated audit opinion, and the approval of the final is delegated. Councillor Tarling.
Yeah, just go back to the timeline thing. I think those questions, you know, there is if we're looking at the end of February, we've literally got a couple of weeks to get questions in to give grant holders a chance to actually either respond. And I suggest, Chair, that you take the questions and then forward them on. As Barry has just pointed out, he's got a filter. Hopefully he's not filtering you out. So
Please do. And I am thinking this is just, you know, to give us that opportunity to make sure that we're comfortable. There isn't anything we don't understand that we feel we should, but as far as I'm concerned, there isn't a burning need to do so. Okay, so for that item, do we have a mover and a seconder?
I'm happy to propose the recommendation.
Thank you. And a seconder, Councillor Walters. So it is recommended that the committee A, notes the anticipated audit opinion and findings of the council's external auditor included as Appendix 1 to this report following the audit of accounts 2024-25. B, approves the current draft 2024-25 financial statement included in Appendix 3. And C, approves the signing of the Statement of Responsibilities and the Letter of Representation by the Chair of the Audit and Governance Committee and the Section 151 officer once the audit work is complete. Do we have consensus on that one?
Yeah,
Brilliant.
agreed.
Thank you very much. Right, let's move on to item 7, External Auditor, Audit Progress and Sector Update. Is that back to you, Katie? Thank you.
Thank you, Chair. This is just our usual progress report that we bring to you. Obviously, the main event tonight was the accounts and the audit findings report, so I won't go into this into too much detail. You'll notice towards the end of the report is our usual sector update, which has some questions for you to consider. There is a couple of slides in there around a report that we've done recently, which is called the Local Audit Reset Report. This will be of interest, some of your questions earlier around kind of understanding more around the processes of what comes after the backstop. So I'd recommend that as a reading for you. It's on our website and there should be a link to that as well. There's also a slide which talks about a webinar that we'll be running in February for audit committee members. We have now got a link to that, so I'll provide that to you, and if it can be circulated, that would be great. Otherwise, no further kind of comments from us. Thank you.
Thank you very much. Can we put that on our action tracker to share that webinar? I'm sure we'd all find it of interest. Any questions on this item? Oh, please, Barry.
Chair, sorry, not a question on our own item. I just wanted to let everybody know that Katie, this is Katie's last audit committee for BCP. After being on the audit for a number of years, Katie's getting time off for good behaviour and is moving on to other audits within the team. But I just wanted to put on my thanks for her support in delivering the audit over the last year. But I think it was only appropriate that the members were notified. Thank you.
Thank you very much, and I'm sure on behalf of everybody we'd like to extend our thanks for everything. You've been so helpful and clear and responding to us and patient with us for a long time. Thank you so much. Did you want to come in, independent member Sam?
Thank you, Chair. And thank you, Katie. Question might be for Barry, might be for Adam. So directly before Christmas, we were expecting news from the government about money for send and support. And to the best of my knowledge, this has been kicked down the road. How long is it being kicked down the road for? And what does that going to mean to the council? Because if this, you've mentioned this evening about how much more the debt is going to increase. What's your biggest concerns around this, and what does the council need to do to prevent that debt increasing just as much as it might do, because that is going to be a disability in the future. It's going to be a problem. I'm really concerned about it, and I'm concerned about decisions the council is proposing and making in terms of expenditure without dealing with this big issue first.
So, Chair, just to remind us, we were expecting an announcement on support for historic and accruing DSG deficits as part of the 26-27 provisional financial settlement. That settlement was made on the 17th of December, and just as to row back slightly from that, we did almost anticipate on several occasions before that as well. But on the 17th of December, when we got that provisional statement, the statement on SEND said we would get an update later in the settlement process. Your guess is as good as mine. But from subsequent conversations with the government, is that we hopefully are hopeful of some kind of announcement during the course of February. So to ensure that our 25-26 budget is as up to date, as possible, what we've done is added in an extra date for cabinet a week later than was originally going to be the budget cabinet, and we've also switched the two councils around. There were two in February, with the budget one being the first one, and then an ordinary one after that. We switched them around to give ourselves the maximum amount of time to receive that kind of information from the government, because we know it will have hopefully will have a meaningful effect on the budget that we set, either positive or negative, as part of that process. So we're giving ourselves as much time in setting that budget as we possibly can to ensure that we've received these important updates from government as to what support, if any, they're giving us towards those historic and accruing deficits.
Thank you. Councillor Andrews.
Thank you. Question of Adam again. Obviously, we've switched the meeting around, moved it towards the end of February. What is the latest date, if there's even more delay from the government, for us to actually set the budget? The end of February, the last day?
There are statutory processes, and actually almost that date in February, you're starting getting very close with regards to the process of then doing the annual billing process, with regards to council tax and business rates, then making sure you've allocated all the information, for example, to the banks for direct debits and things before, the actual statutory deadlines. Generally, the 11th of March is almost the absolute, but you have to row this side of that to allow all of that to happen. So you're quite close to it, but we've, traditionally, we used to have, almost a budget council that was around about the 20th of February. It was only last year that we decided to bring it forward, to the other side of almost a half-term break. This year, we're just going back to probably the position we had for many years before that, as part of that process. But you haven't got a huge amount of time thereafter to make sure you've got all your ducks in a row, and you then issue the bills and you set up the direct debits in time for the statutory deadlines.
Thank you. Did we have any more questions on this item? By the way, I find the suggested questions for audit and governance committees very useful, and I'm sure we'll refer back to them as and when these items come up over the course of the year. Shall we conclude that item there then? So that's item 7. It's recommended that the Audit and Governance Committee notes the external auditor's progress to date in delivering their responsibilities and the sector update provided. Do we have consensus on that one? Thank you very much. Really appreciate you coming in. Thank you very much. Thank you. Okay, moving on to the fire safety update, item 8. And I would quite like to try to get through items 8 and 9 before 8 o'clock, and then take a pause after that, or take a break after that, if that works. So we have Philip Lawrence, Fire Safety Service Manager. I believe you are joining us online. Thank you very much. Hand over to you now.
Thank you, Chair. Good evening. As Chair stated, I'm Philip Lawrence, BCP Council's Fire Safety Service Manager, and this evening I will provide an annual update on fire safety governance arrangements. So the key points to cover from the report provided are that the Health and Safety and Fire Safety Board meetings continue to meet quarterly with good attendance and focused maintained by the Chief Operations Officer, who has recently chaired those meetings. Our directorate level meetings and safety supporters forum meetings remain critical for consultation and communication through to the board meetings. And at each of those corporate health and safety and fire safety board meetings, a review of the risk register is undertaken and amended as necessary. More located to fire safety, our incident reporting system, more commonly known as our fire safety reporting app, provides our staff teams, colleagues, an online reporting tool to log incidents, unwanted fire signals, and near misses. This system continues to evolve, following great feedback from colleagues, as it now includes users from across BCP homes who previously used a different system. My noting of BCP homes brings me to the overall fire safety team, which as of September 2024 now includes our housing estate through BCP homes. This follows a completed restructure. The team now comprises one full-time fire safety service manager, that's myself, one full-time and one part-time corporate fire safety advisor, supported by an external fire safety consultancy, providing additional support for the completion of our corporate fire risk assessment programme. And on our housing side, delivered through BCP Homes, we have one building and fire safety manager and a building safety officer, and the retained services of an external fire risk assessor. The team holistically complete regular fire risk assessments and compliance monitoring across all council properties. Concerning our high-rise buildings within our housing stock, we continue to provide quarterly updates to the housing regulator via the National Register of Social Housing portal. And only recently, we have installed digital information screens in all 6 of our high-rise blocks to provide residents with real-time safety updates as required. The completion of our building safety case reports for those 6 high-rise is expected to complete early this year, with one already completed and sent to the housing regulator. In September of last year, so September 2025, 2 new British standards greatly affecting fire safety went live. They are BS 8674, which surrounds the competence of individual fire risk assessors, and BS 9792, which replaces the former PAS 79 document, which is a code of practice for the completion of fire risk assessments within housing settings. Both of these new British standards are being absorbed by the team and will find their way into our policies and procedures moving forward once we gain a greater understanding of how they're going to impact on the industry as a whole and within BCP Council. In summary, our current government arrangements are ongoing, operational delivery is effective, and we remain committed to continuous improvement and compliance. I'm happy to take any questions there, Chair.
Thank you very much. I had a question on the high-rise buildings, putting screens in for emergency information. I mean, I think that that's great and really useful to have that in the lobby, but presumably if people are away from the building or trapped in rooms, some sort of other direct message to them might be better. Do you do things like texting residents if there's an incident on their building? Is that the sort of thing that might be possible?
That's a great question. Part of our packages for new residents, we provide them information on what to do in the event of a fire or an incident which would require them to say, with regards to our stay put policies in our high-rise premises, stay in their residence in their flat unless their residence is the site of the fire. Then we would ask them to leave immediately via their nearest exit. We provide residents guidance on what to do in the event of, and then what our housing officers are supporting our team with is a sort of an annual residents check-in with all residents across BCP homes properties, and from that we'll be able to identify if any resident would require specific or additional support with regards to a fire incident or any incident which require evacuation. We would then escalate that to the completion of what we call a person-centred fire risk assessment. And we would follow the guidance provided for the completion of that, provide the necessary support. Some examples would be not only an audible alarm in their residence, but a visual device or a vibrating pillow has been used in some circumstances to awaken certain residents for an alarm activation. And we would work closely with the housing support team and the resident themselves to ensure that a suitable means of assistance is provided.
Thank you. Councillor Tulling.
Yeah, sorry, hello, Mr. Lawrence. Just picking up on sort of the Hackett report and obviously the introduce of high-risk buildings. One of the things is residence panels. Have we established residence panels for health and fire risk in buildings?
Yes, we have. And since my appointment in September 2024, I've attended several now, all being very valuable. Two of which have been centred around the new housing fire safety policy, which the residence panel have been crucial in bringing to fruition. Really, our first draft did not really look anything like the completed policy itself, which was a great improvement, and that was a lot of help from the residents group, ensuring the language instruction that we were providing was suitable to residents and not too full of technical jargon that we in the industry find ourselves using too much.
Please.
Thank you. Were there any actions or recommendations that came out from those panels that you sort of added into? I couldn't say anything that stood out in this report as, you know, residents said this, we've done this sort of thing. I think the key thing with engagement, and I've done a few residents engagement sessions or stakeholder engagement sessions where you said we did. Is that something that, are there any instances that you've found so far from those panels?
Two springs in mind. One was the use of less technical jargon within the policy itself, and two was an actual a follow-up from one of the panels where a member of the team attended one of our high-rise buildings to run through with residents the benefits of the stay put policy that we have in place. And the feedback we received from that follow-up meeting, which residents attended, was very positive. It's a good point you make about in the report providing a resident said this, we responded with, and I'll ensure that's included in future updates to the group.
Councillor Waite.
Hello, Philip. I am a little. I have a question about whether we have the right level of resource. I know in fire the medium height buildings, that is between 11 metres and 18 metres, is added a significant amount of workload. I don't really know the numbers, but let's say we're going from dozens to hundreds. So I would like to think that resource in your team has also, gone up since, let's say, January 2023. My question is, how many medium height buildings are we responsible for versus those in the high rise category? How does the current fire safety team resourcing compare to the level in January 23 when buildings over 11 metres came into scope for requirements that previously only applied to over 18?
Okay, thank you. So currently BCP Council are responsible for 6 high-rise residential buildings. So they're the residential properties over 18 metres. And we currently oversee and responsible for 12 medium height premises. So they're the properties that fall within the 11 metre to 18 metre category. Now, following the changes that came into place in January 2023, there was not a significant increase in resource. However, we did focus and put energy towards a planned restructure, which completed in September 2024 to strengthen our overall service delivery of fire safety. So as part of that, I moved from my formal role as corporate fire safety manager to a new position of the fire safety service manager, the role I hold today and report to you all from. Now overseeing fire safety across both the corporate and housing estates. So for our housing properties, those more specific to the Fire Safety England regulations of 2022, which came into play in January 2023, We deliver our service and support through BCP Homes, and we have our fire risk assessments for our 6 high-rise residential buildings undertaken by an external contractor, and then our in-house resource of our fire risk assessor and our building safety officer. They undertake our fire risk assessments and fire door inspections for all of our properties concerning the 11 to 18 metre properties. That approach supports our ongoing compliance with the Fire Safety England regs, which came in January 2023.
And I suppose I'm just thinking from the angle that councillors are going to be under pressure to balance the budget, and then they also have the pressure to do things that residents like. And I think that fire safety is one of those things that people take for granted until you get the once a decade disaster. So I suppose this is your. Are you busy? Are you too busy? What would cuts do in your team?
We are busy currently, facing numerous challenges because of the changes in the industry. So it's been a number of years where we've had new legislation, new regulations come in. We had a new one coming in place in just a few months with regards to residential evacuations. So it's more of understanding and anticipating shifts in the industry, which are keeping us busy, not so much the scale of the properties we have to oversee. We're constantly looking at resource, and even just to bring the person element into it, we have members of the team who in a short number of years will be looking to retire and step away. So we're looking at future planning on what will that role look like following their departure to best fit what the organisation would need in where the industry will be in a few years' time, not necessarily just now. So it's a source of constant discussion I have with my line managers with regards to how to best resource this service moving forward.
Can I ask, do you do work on making sure that emergency vehicles can access every building closely enough? Is that something that you would look at? And I suppose aside from that, could you comment a little bit on what the council's responsibilities are with respect to properties that are not owned by the council? Have you seen, I mean, they're obviously not not the council's responsibility in the same way as council-owned properties are, but we all don't want a disaster on a private property either. So yeah, if you could comment on that emergency services access, thank you.
Of course. So access for emergency services is an element of the fire risk assessment template that we complete. So while on site, we will understand where hydrants are, if a premise has a wet or dry riser, and the access arrangements and distances for emergency services clients to attend, meet, and then perform their duties. With regards to private properties, I can't speak at great detail with that. My main focus would be on council, BCP council properties. However, I have in the past supported colleagues from our private sector housing teams with advice and guidance, signposting to suitable consultancies who could provide some further support. So if you do have any further questions with regards to that, I can reach out to those colleagues and collectively we can provide a response.
Thank you. Thank you very much. I think it was Councillor Beasley first, I think.
Thank you very much, Chair. I think there are 2 questions I've got for you, Mr. Lawrence, if you will. Could I, the first one partly follows on actually from Councillor Waite's questions, and it concerns paragraph 10 of the report, which identifies the council's fire safety team. And my question there, I think, is, are you, in your professional capacity, satisfied with the size of that team? Does it actually fulfil what you believe to be your responsibilities? And alongside that, are you under any financial pressure to reduce the size of that team? So that's my first question, Chair.
Okay. So, thank you. In answer to that question, I'd always like a larger team to take the pressure off individuals. However, currently we are on target for our risk assessment program. We have support, budgetary support for an external fire safety consultancy. So at the moment, there's no real pressure on our resource. And in answer to the second part of your question, no, I'm currently under no pressure to reduce the size of the team for financial gain.
Thank you, Chair. I'm very pleased to hear that. My question is actually one broadly that I've asked pretty much all the time I've ever been a councillor. It's not about the current situation, it's about making sure that the resourcing from the key professional is of a satisfactory level to undertake the tasks that you're responsible for. My second question really revolves around paragraph 12, and it's again one which I have raised previously. And that is to understand the degree to which your line manager, if you like, is engaged in the fire safety aspects for the council, both in terms of the corporate and the housing assets. And to ask you specifically, we'll see here that the Chief Operations Officer is delegated by the Chief Executive to fulfil that role. Although he is still the responsible person. How often do you meet with the Chief Operations Officer? You've been here, I think you indicated, for about 18 months. And how many times in that time have you formally, not just ad hoc, but have you formally met with Mr. Barton?
And do feel free to come back online another time by email if it's easier.
Of course, though, I can provide details. I can go back through my calendars, provide that number. I mean, I've been in this post for 18 months roughly, with the organisation longer than that. Other than meeting the COO at the board meetings, I'd say roughly about another half a dozen occasions where I've met with him formally about a specific issue. But I report to Simon Percival, the head of facilities management. I meet with weekly, if not 2-3 times a week, to discuss fire safety.
Chair, the purpose of my question is to make sure that the importance of fire safety goes right through the organisation, through to the top, and that it is properly accountable both ways. And it's only by actually being sure of that we can be satisfied in terms of audit and governance that responsibility is being fulfilled. So it isn't in any way meant to sound like some sort of trick question. It is very important, I've always felt, that line of responsibility goes right the way through our organisation. So in the hopefully unlikely event of a major catastrophe, that we can reference that is actually what took place. And if it isn't, then I would suggest it needs to be tightened up. So perhaps I take the Chair's view, something back in writing I think would be very helpful along those lines, please.
Thank you. I think Councillor Tarling, you had your hand up before, and then Councillor Armstrong.
Yeah, I just wanted to pick up. I predate the fire safety reform order, and I remember the Hampshire Act, and I remember in 2005 speaking to a senior fire officer at Hampshire Fire, and he quoted a Bournemouth hotel as being the reason why the fire safety reform order came in. I just encourage councillors, if they do have any issues from residents that come forward, yeah, we have our own team, but also just to point out, I once employed, it would then be, building control, local authority building control for this area. I won't name the individual, but got some fantastic free advice from them, which far exceeded the fire consultant we were employing on a project. I won't mention the project, but saved us a huge amount of money. And I'd recommend that if anybody had an issue regarding a private inquiry, should I say, from a resident about their flat or property, that building control are also a service we can call on for certainly compliance.
Thank you. Councillor Armstrong.
Thank you, Chair. I'd just really like to acknowledge you and your team, Philip. I sit on the BCP Home Strategy Advisory Group. That's the group that's made up of officers and residents. It's chaired by Councillor Kieran Wilson and Kelly Dean, who's the strategic lead. She sits on that group as well. And also Simon Percival sits on that group. So we, just for some assurance, as a group, we, like on at least a quarterly basis, are looking at a compliance scorecard. I've got one in front of me actually that's dated October 2025 that says, in terms of the compliance area regarding fire, the percentage of homes and dwellings and buildings that have had all the necessary fire risk assessments, target of 100%, August last year, September last year, October last year, all 100% delivered. So I think it might be a good idea actually to invite Councillor Wilson or Kelly Dean to come along and provide some further information. But I can assure you that there is, in terms of managing performance compliance in this area, my experience of being part of that working group, that strategic working group, and receiving like regular reports from officers and from residents as well, is that as BCP, that it's an area that we're really on top of. So thank you.
No, thank you. Thank you for those words. I'll make sure they're shared with the team. And tomorrow I'll do that. Thank you.
Yeah. Councillor Andrews.
Thank you. Yeah, I've got a point about fires. Obviously, you're dealing principally with premises, but I listened to an interesting debate that took place at ONS committee several weeks ago, where they were talking about trying to give information out to Joe Public not to put batteries into domestic rubbish, because obviously there had been a reported incident just a couple of days before there of a rubbish truck in Wimborne had to disgorge all its rubbish out onto the street. And obviously, if we end up with one of our rubbish trucks gutted with a fire, that's a cost. Obviously, it's insured. But the question is, or the query is, whether your input can help publicise to Joe Public to put those little batteries to one side for recycling separate from domestic waste, because obviously we'd be communicating to the public shortly about the green bins and everything like that, whether that is something that falls into your remit, or is it just sort of bricks and mortar that you're involved in?
Well, no, it's not just the bricks and mortar aspects. We provide fire safety advice to our events team for events that take place across BCP annually throughout the year. And with regard to your specific point on batteries and say waste carriage vehicles and fires located within them, we have previously provided advice on this point to the specific team escapes me on the spot here this evening. I think it's the Council of Commons team that can put information out on residents' intranets and on the actual council's website. And we've also made available all the information and leaflets that Dorset Wiltshire Fire Rescue Service have provided on that topic with regards to battery fires, not just starting in the home, they said, but being refused in the wrong, waste receptacle, not finding their way to a local recycling centre or a supermarket. They now have points that you can discard those batteries for their safer disposal. So we have provided information of that in the past, and we'll continue to do so.
Thank you very much. Really helpful responses. And I'm sure we want to reiterate the words from Councillor Armstrong about the support your team has. And I'm sure you don't need us telling you the importance of what you do for our residents. So thank you very much. And with that, I think we can move on. So it is recommended that Audit and Governance Committee notes the continued progress in implementing the health and safety and fire safety governance arrangements and operational updates. And B, fire safety ongoing governance arrangements updates continue to be reported annually to the Audit and Governance Committee. Do we have consensus on that item? Thank you very much. All right. Right.
Thank you.
I'll pause there and ask members if they have a preference at this stage. We've been going 2 hours almost, but I am aware that there are people present to speak to the next 2 items. So should we try for at least one more item before a break? Fine. Let's do item 9: vehicles and plant replacement, building maintenance and construction works teams. Thank you very much. I think we have Jenny coming here this evening. Just before you start, would it be helpful perhaps if our Deputy CFO comments on why this is coming to us today? Thank you.
Thank you, Chair. So back in July 2023, we reduced the council's debt limits. You may remember any of the committee members were on at that time. And as part of that recommendation, any increase in borrowing that required a business case, it was asked that that business case was presented to Audit and Governance Committee to challenge its adequacy and its robustness to make sure that it could repay the debt as set out in the report. So that is, we've got 2 items to discuss in terms of that increase in debt. The first one being vehicle purchase, and that's why Jenny is here to talk about the business case in front of people. So I'll pass over to Jenny.
Thank you. So they're both the same. We're just agreeing to approve that borrowing, and it's not directly tied to a limit. It's not that it's going above the previously agreed limit. It's just because any borrowing comes through us now.
That's correct. Yeah, I will discuss the limits when I come onto the Treasury strategy later on in the agenda.
Thank you.
Hi, my name's Jenny Major. I'm Head of Repairs and Maintenance Delivery. So I'm just presenting a paper really to try and get approval to potentially borrow to purchase 21 vehicles for our operatives, our trade operatives, at a cost of £525,000. And the second part of the report is to potentially borrow £46,000 for the construction works team, which was to do with plant upgrade. So part of that would have been selling plant and upgrading plant. That part of the report has actually already gone through under emergency powers because there were concerns over health and safety, and it was felt that it couldn't really wait, and so that part has already happened. Just to explain a little bit about why we need the vehicles and what we do. So my team turn over about £20 million. The vast majority of our work is for the housing revenue account, about 95% of what we do. And over the last 2 years, we've had a progression of work because of the councils coming together. So in 2024, we started undertaking repairs for Pool, which increased the amount of work that we were doing. And we've also gradually ended up doing damp and mould. We do compliance across both areas. So a lot of work that was provided externally is now provided by the internal maintenance team. So there has been an adjustment in trying to figure out what that demand is like. Housing itself has gone through its process of looking at a 30-year asset management plan. You know, they've had an accelerated programme of stock condition surveys so that they can properly plan what their investment in their properties is over the next 30 years. So that has also allowed us to know what that demand is like and adjust that demand. So we did purchase some vehicles initially when some of the work came internally to us, but we're in the position now where we're hiring at least 15 vehicles, and it's much better for us to purchase. So it costs less for us to purchase the vehicles. You then have that asset, and we repay that through the money that we get from our clients, so from the HRA, and that is benchmarked against external companies to ensure that we're providing value for money. So the repayment won't actually come from the general fund, it will come from the resources that we get for the work that we do. And the the report is within the document, so I'm quite happy to kind of answer any questions on any aspects of it. It has been through cabinet. I believe the purpose of this is really just to see if the borrowing itself, so it's been approved in terms of why it's more beneficial to purchase. It's just more about the borrowing and making sure that the borrowing can be approved and is affordable.
Thank you very much. Councillor Andrews.
Thank you, Chair. Yeah, thank you for your presentation. Thank you for the report. Obviously, as you've highlighted, and in the report as well, we're currently renting or hiring vehicles, which is costing money. Obviously, if we buy the vehicles, we'll be paying interest. I'm not saying the figures are the same, but there's a correlation there. And of course, obviously, if you own the vehicles, eventually when we've had our use of them, they will have some second-hand value as well. So I think it's a win-win situation to go down this. I'm happy to support this.
Okay, thank you. Independent member Sam Acton.
Jenny, thanks for coming along and giving us that really easy to understand explanation. So thank you very much for that. A basic question: any risks involved that we all need to know about before we, lend our support?
So in terms of how we repay the borrowing, it's included within our hourly rates. It's included in the rate that we charge. So we account for that, and it's always more economical for us to buy. But it's also important to say that we will then, those vehicles are part of the general fleet management plan. So the only reason that we're asking for extra borrowing is because it's additional vehicles, but actually the risk is very low because they're constantly replacing their vehicles. So if a vehicle becomes available within the council that then isn't required for future work, then we don't have to replace it as part of the fleet management strategy, if you see what I mean. So it kind of becomes self-adjusting, even though obviously what we do and what we did as part of this report is look at demand and where we are on the kitchen bathroom program, damp and mould repairs, and what vehicles we are at the moment hiring, and try and make our best estimate as to what demand would be. But it can become self-adjusting because fleet management itself is constantly replacing vehicles. Does it on a 9-year cycle, but quite rightly, even after 9 years, there's at the moment quite a decent residual value on vehicles because they're well maintained with, they haven't got high mileage, and so it does work out. And just in terms of the work that we do in maintenance, safety wise, we really need our own vehicles because what we do is we rack them, then they're all, everything can be stored safely, whereas if you've got a hire vehicle with everything that's moving around in the back, that's obviously not what we want. But also, especially in terms of maintenance, we keep quite a lot of impress van stock so that we can do a job right first time, because our highest cost is our labour. So again, we need to be able to organise that stock so that we can clearly, easily, when we're on a job, know what we need to get in terms of parts. And
Thank you. Yeah, I think that there's a clear need to do this and see the rationale for doing that, and I'm very supportive. I think this may be a question for the finance team. Is we haven't really seen many requests of this kind of level before. The previous decisions we've had to make around prudential borrowing has been for the kind of really big major projects. So I'm just wondering if as a committee, should we expect more of these kind of lower level prudential borrowing decisions? This strikes me as something that kind of officers recommend as part of their service provision as to what needs to be done, rather than a kind of a political decision like of the cabinet, like we're going to receive next. So just commenting, why have we not seen more of these kind of smaller borrowing requests previously? And is it that there's something about this one which is unusual? Is it unusual to be going to prudential borrowing for something like this?
I don't think, I don't think it's a difficult question to answer, because actually, what comes through, when we look at any potential purchase of an asset, we will be considering the value for money aspects of that. And clearly, within this report, what we've got is, the higher strategy that has been going on for a number of years. Actually, the purchase strategy, is better value for money over the period of life of the asset, accepting the risks, because there are always going to be risks with regards to, potentially the vehicle suddenly for some reason, not, meeting the requirements of the service, not being able to use it within the rest of the fleet for whatever reason, and then you purchase something that you can't then potentially utilise, or the actual service doesn't need it and the council doesn't need it, and you purchased it and you can't have that recovery strategy. So there are always risks as part of that strategy that need to be considered. But I think in the report, in this instance, what you've got is a value for money statement that is prepared, as long as we're prepared to accept the risk, demonstrates that it is good value for money for the council. With regards to what comes through, it's what comes through, and with regards to financing any purchase or any asset, we will always consider whether there is a borrowing option, because we know the council is not blessed with huge amounts of resources to finance everything from its own capital resources.
Thank you. So this is the first of this kind of type of decision that's come to us, but that's just a factor of the timing. It's not a change in threshold or appetite to come to the committee or anything. Well, Councillor Tarling. Oh, sorry, I think Councillor Armstrong put her hand up before. Sorry.
Thank you, Chair. It's kind of building on what you were talking about. So last year, I remember we agreed to some borrowing. I think it was with the Poole Museum. We're looking at this, and we're also looking at another request a bit later in the meeting. I'm just wondering, in the whole universe of borrowing, sort of what will be the demand over this next year, and also considering that these requests come directly to this committee. What preparation, what training, what do we need as a committee to really help us sort of drill down to feel comfortable with these requests? What assurances do we need? How can we plan it, and how is the council sort of planning it on an annual basis, I guess? Does that make sense? It's just trying to be able to, can we actually forecast in any way what the borrowing requirements are going to be, and given that we lowered the threshold for borrowing like last year, do we have sufficient capacity to be able to meet those requests? Thanks.
Thank you. I just add to that I think because of seeing this new type of request for borrowing, it just makes me wonder about our capacity to really assess the value for money and the business case. So yeah, just further on that.
Well, I think that might be something for reflection with democratic services with regards to any specific training that members might need. Clearly, when this administration came into power, they recognised that there had been a level of borrowing appetite under the previous administration that they wanted just to not necessarily diminish, but they wanted to have in extra checks and balances. And as the committee is responsible for treasury management and for borrowing, then they wanted this committee not to agree whether or not it's the thing to do, but to assure themselves that there is sufficient strategy in place for the repayment of the borrowing, and that borrowing is therefore viable, and that actually a recognition of the risks associated, as the committee have already highlighted, with regards to that borrowing, so that we go into it with our eyes open, because all borrowing comes with a level of risk naturally, and we just need to recognise that. Alongside that, what you do get is by way of assurances, I think Cabinet, as part of the MTFP update reports, gets an annual update on the level of borrowing and how it compares to other local authorities. And generally, our level of borrowing, compared to other unitary authorities, stacks up well in the sense that, we are not on the high end of the scale. We're probably the upper end of the scale, and that's even if you consider the fact that we have a housing revenue account, because a significant amount of our borrowing relates to our housing revenue account. Whereas other local authorities that we might be compared against don't have housing revenue accounts. So therefore, you know, you could say, okay, you're on this end of the spectrum, but if you took that HRA out and that borrowing out and compared yourself like for like, you might be even further to the right. So we haven't got high levels of borrowing at this moment in time. And I think that the approach was to just have that governance robustness in place to make sure that, you know, if we do increase our borrowing, we do it with our eyes open. We understand the risks associated with that, so that we don't get into the position that we've seen some other local authorities perhaps get themselves into, you know, and all the consequences that flow from that because of their appetite for borrowing, you know, and not maybe having a few extra checks and balances in that process.
Thank you. I think we'll return to this discussion on the subject of the Two Rivers meet procedure because it's a similar question. But shall we oh sorry, Councillor Tyler, you were going to come in. Sorry, go for it.
Yeah, thank you very much. I've been involved in, hired a lot of construction plant in my day, and actually bought and selected construction plant in the day. So I'm a big fan of buying. Think it's a good idea. Did we investigate the? You got here hire rate, and there's different types of hire. As in, you hire something for a job and you off hire it. And the biggest challenge is obviously making sure you off hire at the right time and you get the right piece of plant from the right supplier. And I see we've got a straightforward hire, but there's looking at the larger pieces of plant there. You've got a did you investigate, especially with the larger plant there, the option of a long-term lease and maintenance? If for example, if you take the 9-ton excavator, you know, sometimes you want a 9-ton excavator, sometimes you only want a 1.5-ton, or you want a 20-ton. And certainly for the FCERM work, you probably want a 20+ ton. So your 9-ton isn't going to cut it. Was that investigated and yeah, as the long-term lease as an option here instead of outright purchase?
That for the plant, just to clarify, it's more to do with Max Creed and the construction works team, but because they were we're similar services, it was included in one report. But I know that he did look into lease options, plants, an area that he's very passionate about, as anyone that has spoken to Max will probably say. And I think actually they managed to get a really good deal in terms of purchase because they didn't buy new, they bought second hand, but just you know, they off-sold some plant and bought a good deal on second hand equipment. So I think actually they managed to fulfill their requirements for less than was in the initial report. But they certainly, at the time when they were requiring large bits of plant that didn't quite meet their requirement, they were looking at specific jobs just because of the pattern of jobs that they were doing at the time. You know, they didn't have that consistency, so they were hiring off hiring, but it was certainly something that they considered.
We just want to come back on that one.
Yeah, thank you. I think certainly when it comes to the fleet of vehicles and vans, I think it makes sense to probably buy. But as I said, where you've got a specific, and perhaps a telehandler is a bit more universal, but the larger plant, we wouldn't want to keep a large fleet of reasonably specialist vehicles that are only going to be used for sort of 10-20% of the time, and that's why you would hire, or even if it's that technical, look at a long-term lease. But I accept that you said, you know, it was considered, and that's the key thing, that you considered that as an option. Thank you.
Thank you. Oh, did you want to come in on that one?
Just to highlight, with regards to leasing, we're always a little bit nervous around leasing because leasing brings it with a shed load of different accounting requirements, you know, and therefore if we leased a lot, then probably need a few more people in Matt's team. But also, you know, just drawing on experience, one of the predecessor authorities used to lease practically every single vehicle, and that was okay until the lease company failed, and then overnight all your services were paralysed, and you had to go through a huge process of negotiating with the administrator to almost then buy those vehicles using potential borrowing, so you could then carry on with service delivery. So it's not risk free. I just probably highlight that.
Yeah, I was just saying, Mr. Richards, that's three bits of plant. Don't think you need an extra accountant to manage 3 leases, not full-time equivalents anyway.
Councillor Phipps.
I think what's proposed is very sensible, and I'd like to propose that we take the recommendations, approve as A and note as B. That's a proposal.
Second.
Yeah, fair enough. Do we have consensus on that item? So it is recommended by Cabinet that Audit and Governance Committee approves the use of prudential borrowing not exceeding £525,000 for 21 vehicles to be purchased by Fleet Management to support the work of the Building Maintenance and Construction Works Team Service. These vehicles to then be managed within the Council's fleet management strategy. It is recommended that Cabinet and Audit and Governance Committee note that CWT plant purchases with up to £46,000 prudential borrowing requirement have been progressed under urgency powers due to health and safety considerations. Do we have consensus? Thank you very much. Thank you for coming in. Shall we take a short break there? We'll pause for 10 minutes. So let's come back at 8:25. Thank you. Okay, thank you to those joining us online. Thank you for your patience. Right, we're moving on now to item 10, which is on Two Rivers Meet Studios. And this is a proposal to recommend increase in borrowing to accommodate an extension at Two Rivers Meet Leisure Centre proposal. I did have a question further to that last discussion on the wording of the recommendation, because it's not obviously the same question that's being put, so it would be useful just to kind of understand the distinction between those decisions. But either way, it's approving borrowing for this purpose. So we have who's presenting directly at the portfolio holder himself, Councillor Herrick.
Thank you, Chair. So I'm not going to go into hopefully too much detail after my cabinet presentation yesterday, and I say in short, but actually I've probably got a page. So I'll crack on. So Two Rivers Meet performs well, is award-winning, and is our only council-owned leisure facility in the Old Borough of Christchurch, and is also home to the only 25-metre pool in the Old Borough. It needs investment. Classes are currently held in the sports hall, which is divided, and squash courts, and therefore this is a proposal to improve the facilities by adding 2 studio spaces to enable that studio programme, freeing up space in the sports hall and squash courts, which are, I think, described as suboptimal for classes, and much better used for other sports, mostly squash in the squash courts. So the numbers are as laid out in the appendix. They have been obviously robustly challenged internally. I don't think Mr. Richards would let us get to this point without being satisfied. The leisure industry is in 6.1% growth, where there is no investment happening, but with this investment we'd expect to lift to 14 to 18% in terms of membership against this investment. By doing this in-house with a proper built facility, we will see improved retention and uplift in membership and in secondary spend, along with freeing up our current facilities for other uses. To address a couple of points from the statement at the start, taking units off-site with other organisations or just renting in the high street would add costs to landlord rent, additional rates, staffing costs, as well as depriving members of the facilities on site, and particularly those that want to use a class and then take a dip in the pool. This would also fail to demonstrate that what the additional demand is, because we would be demonstrating demand for classes in a separate location, not on site at our leisure facility. One of the principal benefits of Two Rivers Meet being the only 25-metre pool in the Old Borough of Christchurch and having a really strong reputation. A temporary facility would still have significant planning requirements and build cost, and would not have the modernity expected and achievable from an integral facility. Operating the facilities will be largely within the cost base of the centre, and maintenance covered by the sinking fund as laid out. And this does give us some margin in our figures and estimations. The forecast income can afford a 20% drop before it impacts on the viability of the scheme, with uplifted income not included in the MTFP at this point. On top of that, there's a further 4% from the sinking fund before this becomes a current pressure to the council. The business case also identifies several improved income streams from the development, which means that if one is not as strong as another, with the improved spaces and facilities, we'll be able to pull another lever to help maintain or improve income overall. And if there is not uptake at the anticipated level, obviously our costs would be reduced, as most are direct to the operation of the space. Not only that, but there is also additional income not accounted for within this, particularly from parking, and I hope that offers to the committee an outline of the finances, risks and mitigations to make the case for the borough.
Thank you very much. Deputy CFO, could you expand a little bit on the wording of the two proposals being different? So I think previously when we talked about these, it was with the borrowing decision was related to the borrowing limit that's been agreed. But it's not really what's happening. It's just any prudential borrowing increase comes to us and we just look at the business case on that. So just if you could comment on that. And just to remind the committee members that we're not here to look at the political decision as to whether the scheme is a good thing to do or not. This is the whole point of this, is that we're looking at it with a different lens, purely on the basis of the ability to repay the loan as presented to us. Even if we think it's a great idea, we're looking at it separately. Could you comment on that?
Yeah, through you, Chair. So the wording's slightly, I would remove the word limit. We're not asking to increase the council's borrowing limit. We're asking to take out borrowing against the set limit, which is actually in the next agenda item as part of the Treasury strategy. And I'll explain where we are with those limits in a bit more detail at that next item.
Okay, thank you. So, does any members want to come in first? Independent member, Sam Acton.
Thank you, Chair. I do have a question about what you said. Is that okay? So you gave a very quick response in terms of Mr. Redmond's statement at the bit at the top. So thank you for acknowledging it. But he very much was flagging up items that he felt that was lacking in the business case. So what would happen if you did this rather than that? So what would be the cost versus that? Are you intending to pursue this? Because I think what Mr. Redmond raised is really, really valid in terms of the decision-making process. I do recognise that the Chair just indicated that's possibly not what we're meant to be looking at. Again, same questions I put to Jenny. What's the risk in this borrowing? And why is this happening now? It was very clear from the previous pitch that the borrowing needed to happen now. Why is this happening now? And that is a really important question to me. As I said before, I'm very concerned about the overall state of the council's financial situation. So the answer to that now is extremely important to me, if you don't mind answering it, if you can.
I'll defer to Helen on the overall business case and what was considered up to this point, because quite a lot was considered. As you'll know, you have a 500-page agenda. So obviously the report that we put forwards, we have to balance how much information goes in against how much will be kind of, I suppose, read. In terms of the risk, I suppose there is a risk that we don't have the uptake that we anticipate. There is a risk that that we don't achieve the income that we want to repay the borrowing. But there is also a risk about not doing it. One of the most significant things we experience in terms of losing members at Two Rivers Meet is not having dedicated studio space. And I believe is the number one reason we tend to lose members as they look elsewhere. Obviously, we do have the benefit of the pool, but also when people are looking for, and I keep seeing the word Les Mills, and I hope I'm saying that right, and it's not like French.
You are.
But that is a really big draw for a lot of people, and particularly women and girls having a dedicated studio space, whereas the sports hall at Two Rivers Meet is kind of, you can see in, there's nets, and it's just a very different environment to the exercise that people are looking for. And I will, sorry, I thought Margaret was hailing me, and I'll hand over.
So on the options that were explored, so we explored a number of different options, which included remodelling the sports hall, repurposing squash courts, and also if there was an extension to the gym. They're all assessed in looking at the logistics through the structural constraints, and financially, and they were, as we were moving through, they were discounted due to either inadequate space, structural constraints, or disproportionate costs. In terms of if you took something away, so you had a standalone, in terms of that, it would take, again, it's a consideration, but it would create so many operational challenges because you've got a completely standalone area, logistically for customers, costs as well, where at the moment, say, a duty officer could oversee the whole site, you'd need two. So in terms of that financial case, it would be disproportionate of expenditure for the income.
You also asked why now, and I didn't answer that. So this is actually, I think, a report that's been kind of a long time coming. I think the team have been looking at trying to invest in this space. We did consider deferring for a wider leisure item that we would obviously have to come back to A&G for more borrowing on a commercial premise. But given that we would like to press on with this in terms of planning, there are some restrictions around kind of nesting birds in essence. So we're trying to press on at this point so we hit a window in time rather than bringing it all at once. But as you see, our business case is that we will contribute positively to the council's financial position, although there is some risk. But obviously we're looking at £20,000 a year in terms of a better off position than we are now. And as a council, we do have to try and stretch our assets and make the best of them. I hope that provides some reassurance.
Councillor Phipps.
Yeah, I see that on here there are 2 stories, 2 studios, 150 metres square each, is what it says. So it's 300 metres square. Divided by sort of about 1.8 million is about £6,000 per metre squared. Is that what is considered to be value for money? And has this already gone through a procurement process? When I say procurement, got tenders in, so you know how much. Where did you get your, this amount of 1.8 million from?
So we've worked very closely with our facilities management team, dedicated project management team, to get all those costings in and to include a contingency within it, looking at our internal teams as well in order to be able to price it. Obviously, we need before we can confirm everything, we then need to go to planning. There's the process to go through before we can finalise, and that will be managed and governed as we go through the project through a steering group.
So by the time you've gone through all this process, I mean, are you confident that this amount is still going to be all right? Because as we know, everything goes up and up and up all the time. It just seems a bit loose, if you know what I mean.
So in terms of at every stage, we work really closely with the finance team to then resense check the figures and make sure that we've got those costs right. So at every point where obviously development does take time, but we've gone through and rechecked those figures at every point just to make sure that they do still equate.
So this was tested again just before we kind of obviously pressed it on the cabinet process, and I suppose the risk in delaying further, and you say why now, is that actually because costs are rising in this area, so we do want to crack on as well, whereas the other work does need more work to be reassured, whereas this one we're satisfied that there's a strong case for it.
Can I just jump in with one of my own? It mentions here that you're planning later in the year to do to take a paper to cabinet across leisure centres. Would it not be more cost effective to borrow for works done across them and do a kind of coordinated piece on leisure centres in the round? And then the second question is, you mentioned an 18% uplift in membership sales was used in the calculations, whereas the annual membership growth of the sector is only 6.1%. So could you talk a little bit about how you've got to the 18% uplift in membership sales assumption?
So that is, the 6% is based on where there is no investment taking place. At the start, I did say that, so I'm trying to remember my exact words so I'm accurate, that where obviously we've putting an investment and this being the number one reason for our losing members, we're confident that uplift is realistic.
Just to come back on that, it says that the UK Active report shows that's the growth across the sector. So presumably that's not specific to Two Rivers Meet as a projection.
No, that's generally how leisure is performing generally, and I think just an important note on that's without any investment. So they're seeing a 6% or 6.1% growth, and that's annually. The 14 to 18% that we've put in is set, so within your 3 years you'd be at the same. I think it's also important to realise that as well as the income that we're forecasting, it's balanced by retaining members as well. So by retaining, we're not losing, and we're seeing the leisure centre grow rather than stay still.
I'm sorry to keep coming back on that point, but does that, when it talks about across the sector, does that mean including of leisure centres that already have studios? I'm just trying to break down, is this how granular an analysis is this of the impact of studios on membership? Because if it's just about the whole sector's performance, then that includes leisure centres that already have studios. So I'm just trying to understand, do you have a breakdown in how you got to that 18% assumption?
So the 6.1% is generally on leisure centres. We know that from
national data, but also from our centres and our customers, that actually the studios or having studio space is a really important reason why people join. And again, it sets it apart from some of the pop-up gyms, for example, is that dedicated studio space and also swimming pools. So yes, we have broken down how many members that would look like, what members we've got now, how many members we would need to retain and grow in order to get to that. And then we've also looked at our pay-as-you-go membership rates and factored those in, and then external function hires. So there's a number of different income streams there that all then make up the 255, I think it is, from there.
Yeah, I would have to, in terms of the overall borrowing and the impact, and well, I would have to defer to someone, a finance colleague, on
Just on that question of why not to do it alongside other leisure centres later in the year.
So that we can firstly get the investment in and underway, but also that planning issue with the nesting birds, because we did consider a deferment to bring this all as one, so that it was one set of this for the committee and for ourselves to bring to you.
Sorry, I jumped in front of Councillor Armstrong, but then Councillor Gibson.
Thank you, Chair. And there's some pieces of information that were really missing for me with regards to some sort of options appraisal and what other options or partnerships were explored here. And one thing that I think is really missing, there's no narrative about the engagement with BH Live, for example. So I'm left wondering, why is it so important for the council to keep hold of this particular centre? And obviously, when you work in partnership with a delivery vehicle like BH Live that's also got charitable status, it potentially opens up other options for raising funding that may not include borrowing. So I'm just wondering what analysis was done, and if that option was ruled out, why was it ruled out? And could there not be going forward some sort of service agreement, service level agreement or partnership arrangement that would then enable the council to get funding from elsewhere? And also I would echo your point, Chair, about looking at this holistically as opposed to a piecemeal approach. Thanks.
So just to answer the first one in terms of other providers, so there's a separate piece of work that will be coming, that we've done a timeline and updated overview and scrutiny on it late last year, I think it was, in terms of the leisure centres and future management of the leisure centres. That will be another, like you say, holistic piece of work in line with the timeline that's been put forward for that. So that's a separate piece of work, but whilst that will go on in the future, it's about then still investing in and keeping the leisure centres current at the moment, which at the moment Two Rivers Meet is council run.
I'll just carry on BH Live. I think that was tested legally, because obviously BH Live had a contract with the old borough of Bournemouth. They do not have a position with BCP, and they would be subject to a tender process and a really complex thing, which is why we are looking after our leisure centres at the moment, so we can take a longer term strategic view at the right point, rather than kind of try and rush something. But that doesn't mean we shouldn't invest in our facilities. We have put over £3 million into the BIC, for example, which is obviously a BH Live facility to help improve the conferencing there as well in recent years. So we are still we're investing across the estate, and again, even because it's BH Live, we're investing with them in places as well. That's still obviously council money that went out to BH Live.
Thank you for allowing me to come back on that. BH Live and any other sort of providers to one side, are there not any other governance frameworks that could be looked at that would allow that leisure centre to be able to apply for grant funding? And I can only use this like in my local context. For example, within my ward, I'm working with the community to set up like constituted groups, like friends of groups. Could there not be a friends of or a charitable arm related to this leisure centre that obviously local people feel so connected to and would want to save. I mean, we're seeing it with library services across BCP as well, where community groups are coming together or community members coming together, finding an appropriate way of governance so that they can actively fundraise, bring in grant funding to save services, save buildings. Can we not apply something like this in this situation?
It's a really big question. I think it's something we could examine. I'm sure a leisure centre would be open to a friends of group for voluntary support in that space. In terms of grant funding from that, because obviously we are a unitary authority and where we are, I think that we would struggle to do that. The government also view these as commercial operations. When the national insurance increase came in last year, because we operated our own, we didn't get the amount of coverage that we were expected because of our commercial operations. And also, I'm from Lincoln for my sins, but Lincoln last year lost 3 leisure centres in a day as a provider collapsed that was a charitable entity, so they're not without their risk either. So we're quite lucky in that we operate our centres pretty well, fairly, with a cost to the public, but on a commercial premise, whilst balancing that. But there are different governance models right the way across the UK, and there's probably no exact right one. They will vary by time, and you've kind of got to pick what you think is the right thing to do at that point.
Thank you, Councillor Phipps.
Just a very quick question. Is there a business case for this?
Yes, so in terms of the cabinet report, we put the key financials, but yes, there was a business case developed for it, yes. Yes.
Councillor Tarling.
Yeah, there's loads of bits of questions here. Generally speaking, supporter, just to answer about the funding, charitable funding, I'm looking at another project for another council, which I'm a member of, and there's no funding available for swimming pools for the charitable sector. It's just not there. So if you want football pitches, the FA about the only people that've got money for any sport facility. Sport England, virtually their purses are locked. You can't get a penny out of them unless you spend a lot of money in the right thing. I just got a quick question about the timeline. You mentioned about bird nesting. You've got here that you're looking to start on site in September this year, and obviously completion in July. Obviously, so you've squared that one away. Sort of just running up to that though, the planning approval, and this council doesn't have the best record of doing its own planning approvals, and I'm not going to get too spicy about that, but I noticed the designs that are shown in the restricted section show what I can see as mechanical, electrical stuff, and I'm just put in mind of the fire discussions we had. Has it actually been fire checked yet as part of the design? But I noticed the upper studio, the travel distance, and knowing the area as well, it will be fairly close on that. So I think you're missing a fire escape on the building. Just want to know that that's been checked. Thank you.
So I can't give you the specifics of the building element because our facilities management team and the project manager linked to that has done that. They have gone through all of those processes and continue to take that forward, ready for submitting a planning application subject to the relevant approvals. But yes, we would absolutely link in with them, and I'll take that point back to them as well and just check that.
Sure.
Yeah, I noticed there's a lot of stuff on here on heating and cooling plant, which really isn't necessary for this report, but it does then strike with me as well that there is a change to some of the building regs coming. Well, we're expected very soon on heating and cooling, and I'm assuming if we get this started in September, that we will not have to comply with the latest version of Part L of the Conservation of Heat and Power. So again, there's another reason to get on with it, because that would then increase the cost probably about 10-20% of the project, just to make sure that your project, I can't see it in here, but a risk report as part of this hasn't been included, but I'm sure it was in the business case, that has also been considered as a material risk to the project changes in the building regulations, especially the conservation of heat and power, which is coming through, if not now, very soon.
Yeah, thank you. And Councillor Hadley tested us on that cabinet and the environmental credentials, and we'll be working with him to make sure we're maximising them within the budget we have.
Right, we have Councillor Andrews, then Councillor Beasley, and then Councillor Armstrong.
Thank you, Chair. Yeah, as been said, there's no planning approval, though I did check. There was one submitted in 2023, which was withdrawn. So perhaps the officers have done something, and the file's not completely suspended. Also, I believe there's been no invasive site survey carried out yet, because obviously, this is preliminary. I am aware that all that area around there used to be low-lying water meadows, and to raise the level of the land, household refuge was spread out all over there 40 or 50 years ago. And also, I gather, there is an inbuilt contingency of 10 or 12.5% in the costs of 1.8 million. But my question is, knowing that it's a filled site with perhaps potential methane gas emissions, are you confident that the scheme will come in on budget? Because obviously planning may throw up some other conditions which you've got to comply with.
So pre-planning advice has been sought prior to bringing it forward to Cabinet, and we continue to work through as any project and any development until that full planning is submitted. There potentially may be things that do come up that need monitoring, and I think that's where it comes down to the governance of the steering group. For the Director of Commercial Operations would chair that, and that risk log would manage that. And if those risks couldn't be mitigated and that tolerance was going to be go too high that wouldn't remain within the project, that's when we would obviously have to escalate that. We can't foresee everything and the challenges along the way, but we would mitigate them and make sure that there was that robust checking as we go through.
And a couple of other points. Is it correct, basically, that the receipts you're intending to get in from members using the facility day by day is going to effectively help fund the interest on this scheme? And linked in with that, clearly, somebody said, well, what if you don't get the take up? Somebody says, are you going to get this 18% take up? Well, clearly, if you don't, might be a potential to actually hire out the studio on a long-term hireage or lease agreement to, I don't know, a dance course or a boxing gym or something like that, which will secure an annual income, inclusive of many outgoings. So I think, this is something which, Christchurch needs. The facility there was built, 40, 50 odd years ago. It is crying out for more facilities there. The population has gone up, and I think it's something that if you can give me satisfaction that the income is going to substantially pay the interest, I'm supportive of it.
So yes, the interest is covered. Our figures predict about £20,000, I think £18,000 surplus in the first year. Obviously that rises through because the borrowing costs are fixed, so through the 20-year term that obviously comes out much higher by the end of it. And yes, you're right, if we were, I think, in a position where we had to examine how we sweated our asset as best we could, there would be other options we could examine. Our teams are quite adept at doing that, and we do that across the leisure estate, work with clubs and other things to make sure that we're maximising the use for the community and for the taxpayer as well.
There's Councillor Beasley next.
Thank you very much indeed, Chair. I'll take us back again to the beginning of the meeting with Mr. Redmond's statement and his comments, which certainly were not lost on me, because I think he was talking there about having a more robust appraisal, and I'm neutral on it at that stage, because until I see that evidence, it's very hard to gauge actually whether there is a proper assessment of risk and whether the financial implications are properly assessed as well. And I'm really struggling with it with this paper, I'm afraid. That may sound quite negative, but I'm struck by how much is missing from this report to help me come to a conclusion. And the purpose of audit and governance is to give that surety to the council and to the council taxpayers that we have done this robustly. And I'm not convinced actually that we have. Another member of this committee mentioned just now about an options appraisal. It's also not just about an options appraisal per se, but it's about assessing all the other things that go around that. I've got no idea from this whether there is a high risk of private sector local competition, not just now, but emerging. I've really got no idea actually as to what's taking place with BH Live, because that was one of the comments I'd written down at the very, very beginning. I'd be very interested to see what this legal advice is, and perhaps that can be supplied to us, because as one of those who was involved in setting up BH Live, it seems alien to me what I've been told this evening, so I just don't understand it. BH Live deal with a lot of different tenures. It isn't just about Bournemouth assets. They manage elsewhere, and it isn't just about ownership. It isn't just about reinvestment by BCP Council in Bournemouth assets. It's much wider than that. And it just seems to me that we should have a much more holistic approach to this. We've got BH Live there, which is not constrained to its current assets. I'm not suggesting whether or not that's the answer, or whether a service level agreement with BH Live might be part of the solution. I simply don't know from reading this report. And I think as members of Audit and Governance, actually, we should know. We need to know to be able to make that decision. So I neither support nor reject this report until I've seen the evidence that I need to come to a conclusion. Thank you, Chair.
Thank you. And just to jump in there, I'm going to give you a chance to respond. I mean, my position is quite similar. I've been struggling with this one. I don't have any problems with the principle. I like Two Rivers Meet, and I totally buy that you need studio space to keep attracting members. I don't disagree. But in terms of what we've got before us, and this is not to say that the analysis hasn't been done, but just in terms of what we've got to see before us, I think I've got three issues. One is the projected income and how robust that is. Second is the being joined up with the other leisure centres. It's not clear to me what happens if another leisure centre suddenly, builds something even more wonderful, and so it doesn't actually attract the extra members that you're thinking. So that's why I think it's got to be joined up. But the biggest issue for me is the opportunity cost. And that's something I think just more widely on when these borrowing questions come to us is 1.8 million borrowing. Do we really feel confident that this is the best way to spend that 1.8 million to gain to get that benefit to BCP Council? I can't see where else it could be spent instead that might actually provide more income overall. And so I think there's a big question for me is why this one and why not many other projects that you could spend 1.8 million borrowing on. And I totally understand the need to attract revenue for BCP, but is this really going to be one of the most effective ways of bringing income into BCP for the 1.8 million spent? So I'm just conscious both of us has just said a lot of negative comments to you there. So it might be that there's a question about coming back to us with more information on it, but see what others think. But let me let them respond to all of that negativity and then come back to you guys.
So the BH Live question is one of procurement, that we would have to do it as a full procurement exercise to look at if we can't just gift our assets to BH Live as something to run, because of that is essentially the advice. And I'm sure that people would be prepared, the people that have that would be prepared to share it. I think in terms of why this, I think this is one of others that we we'll be hopefully bringing forwards. It's not a case of just this instead of something else. This is something that we have as so our CFO mentioned earlier. We have relatively low borrowing, and where we can justify it, we will be bringing it forward. These numbers have been tested. I suppose it's that case of what do you put in the report and what do you not, and I think it's a fair challenge that obviously what we've put in is what we believe will be the outcome, rather than all of the possible outcomes. We could put, I suppose, a spectrum of 50% either way, and we would be having a discussion about why would it not be the bottom of this spectrum and not the top. What we've presented is as robust as we confident figures we are confident in, and we could have put them higher and then said, well, we'll reduce them a little bit. So we kind of, I suppose you've got to find a point at which to present appropriately. But I think it's fair that A&G as a committee say, actually, we would like more in the future. But, yeah, I suppose that's where I'm up to. I've probably left some questions behind. I don't know if Helen has anything more to offer on further answers.
Thank you. So who else wanted to come in on this item? I think it was Councillor Armstrong, Councillor Tarling, and then I think we should probably try and move to a vote on it. I think we've said our oppositions.
Thank you. I think this document is also coming to us on the back of, you know, we've gone through quite an extensive piece of work looking at future places. We've got Carter's Quay where, so I think in terms of needing reassurance and recognising where we may have been burnt in the past, I think perhaps there's some of that extra rigour and inquiry that we're bringing to this. I mean, just noticing some sort of discrepancy with interest repayments on the narrative. The appendix is saying 5.88%, but the headline is 5.5%, and we already know from in the past where we've had ambiguity on interest rate payments on money that's been borrowed from the council, there's been an impact. So it's perhaps some of the detail is missing from this, and also some looking at considering like the options appraisal. What would happen in the event of the planning permission not being granted? And also, if that planning process was to delay and we've got increasing costs, will the project still be viable? Would we get to a point where we've seen in previous projects where we've not been able to deliver it because it's no longer viable?
I think I would just add to that as well. I think what we've seen in the past is sometimes once a project gets started, it's kind of quite a big decision to pull funding and make it and abandon it. So this is kind of the time to be the most critical, because if borrowing has to, you know, if we have to increase borrowing again in future because building costs, etc., then, you know, so that hence the extra rigour now.
So firstly, I would say it's incomparable to either of the projects, Future Places and Carter's Quay. We are borrowing for a council asset for one that would remain in-house. In terms of failing to get planning, we're coming to get the borrowing authorised before we go to planning. So yeah, so if we didn't get planning permission, we wouldn't go ahead with the project and we wouldn't borrow the money. Obviously, you would grant permission for that borrowing, but we wouldn't do the borrowing. That's, I think, the very clear answer.
I think it was Councillor Tarling, but I think the independent member hasn't had a chance to speak yet. So if you could go quickly and then to say.
Yeah, look, I've at risk of saying that I've done one of these before, and I know one council's picked me up on this, but I've done one of these before, a leisure centre for Fareham Borough Council, and the change is massive. That you spend money, you get it back in leisure centres, and that was a change that happened about 15 years ago. However, you know, I like a lot of people here, 100% agree. I think it's a good idea, but it's not shown in the reports, and the feasibility report's been sent to us, which is restricted, can't talk about it, but it's an M&E report. It doesn't include the risk report. We don't actually see the full options appraisals laid out here. If this was a Future Places report business case, I'd be ripping it to pieces. I absolutely think it's a great thing to do. The Public Works Loan Board as well, you've got there about the rates. Having recently been involved in buying a car park for another council, I have to say, and finding that the Public Works Loan Board's rates do go up and down. I say at the moment I think they're falling. So it might be another good reason to be looking at procuring it now. But again, it's that financial risk element of what happens if the PWLB rates go up during the construction process. Are we drawing down 1 time, 2 times, 3 times, 4 times through the project? I think it's really good, but I don't think the report that's put in front of us actually gives us enough information to make that decision. I am supporting it because my absolute gut, and you look at the figures, 1.8 million, yeah, absolutely fine. Every day you could build that for 1.8 million. But I don't think it's demonstrated the risk has been clearly identified in this report, and the options in the sense of a business case I've been sent here. I didn't see the report that went to Cabinet. Apologies. I just looked at this as it came through. So
I think that was more of a statement, so thank you. But independent member Sam.
Yeah, just a bit of an aside information, in the private sector, it's nothing unusual to have to secure full planning permission before securing the investment. So don't be disappointed.
So is there like a risk assessment framework, a value for money frame, a prioritization, a sort of ranking of, if we're going to borrow, the best thing for BCP to be borrowing for is this, right? And followed by this, rather than as and when the situation arises. So I don't know if that chimes with other members, but it strikes me as it would be helpful to understand that you've compared the value to BCP from undertaking this borrowing, and look at how that compares to other possible schemes, because I could think of other ways to spend the 1.8 million for residents. And I think that kind of assessment, I mean, I think it comes through in some of the paper. In that last decision, it kind of came through clearly as to why they needed it now, and why it was kind of what the case was there. And I just think if we're going to be looking at these where there isn't the obvious timing question, let's try and be clear as to what the why. Councillor Phipps.
Yeah, well, we seem to be all pretty much, I think, mostly on the same page with this. So shall we come to a conclusion on it? Have you got any suggestions here or a recommendation?
I would make a recommendation that this, I mean, either I could just vote against it, or I could make a recommendation that you return to A&G with more detail. I'm keen on others' views to which line to take. Would you rather just vote straight up on the recommendation as it is, Councillor Tiley?
yeah, sorry, I support this. As I mentioned just previously, but I would like to see the full business case laid out as to the standard that we expect now in BCP, and as part of that, the risk report. Now, if it's just the fact that the papers are there, because you've told me it's there, and they were presented to Cabinet, I didn't see the Cabinet papers. Apologies, but I do think they should have been here as part of this pack.
Should we not ask to see that before then making the decision? Or are you happy you want to make the decision without sight of that?
Honestly, Councillor Herritt's point that they need a decision now to go to the next stage. I take on board comments made that we don't need the funding to start the planning permission, but that does mean that we have to then set aside some monies budgetarily for doing the next stage, for putting the planning application in, which is sort of 10% of the cost. So you're looking at £180,000 worth of design fees and planning application, roughly speaking, to get this submitted, if working on the basis of the figures that has been put to us. So, that's then risked money. But
can I make a proposal then that this item is deferred until you have shared with A&G more detail, including on the business case? And anything else you wanted to add to that? Well, Jill's writing the business case and risk analysis.
Well, yes, Chair. I want personally to see the issue of the opportunity cost. I want to properly understand that. We can't perform the duties of audit and governance unless we've got this information. A proper options appraisal, a sensitivity analysis, which historically this council hasn't been very good at providing, but for me is a key document for us to be able to make that assessment. And whether or not the service goes ahead and does planning or does anything else is a risk that the service must take. Our duty is to make sure that we've fulfilled a proper analysis of the case that's in front of us. And we can't do that, so therefore we need the information before we can. If the council decide to go off and do its own thing, regardless of that, it is inherently taking its own risks.
So should we say that that I make a proposal that we defer this item until A&G has been presented with more information on the
including business case, opportunity cost, options appraisal and sensitivity analysis.
Yeah, I'm happy with that. Do we have a seconder for that item? Councillor Armstrong. Shall we take a vote on that? Okay, all in favour of that amendment?
1, 2, 3, 4.
And those against?
1, 2, 3.
So I think that motion carries, and I am sorry to be disappointing in that sense. I hope that it's not too difficult to put together, because I'm sure that you've undertaken the work, and it's just a question of showing it to us. In terms of process, I think that supersedes the proposal as in the agenda.
Yeah, you've made an alternative recommendation.
Yeah. Right. Does anyone want to say anything else on that item before we move on? I know it's not the outcome that some wanted.
I abstained. Just said they didn't ask for it.
Oh, sorry, and abstentions.
1 abstention.
Thank you. Yes, please.
So obviously the pathway for this is we would have to go to council anyway for that. And there is, in terms of our timelines, there is an A&G meeting on the 26th of February. So what we might propose, and I don't want to preempt anything, is that we take this to council, discuss the concept, and then come back for a final approval on the borrowing, rather than kind of to see if we can't still hit our timelines.
We've done that before. We've done the borrowing approval after cabinet. So, Councillor Talley.
It wouldn't be the first time that we've asked for stuff to be sent to us to appraise, and I know you voted that we're not recommending it for approval. That doesn't mean that cabinet, as I understand it, cabinet can't get. I'm not quite sure what our powers are to say yes and no on this. I mean, hopefully cabinet don't go against recommendation of A&G, but it wouldn't be the first time a cabinet's gone against that recommendation. I don't know how that works for us as against our constitution. However, if we were to receive the information via email and we could consider it, that maybe we could have through you, Chair, a review of it and give a narrative that could then go to full council. That A&G have since reviewed it. And then when we get to A&G, we just have to rubber stamp that decision. I know it's a bit complicated, but it does mean that it then frees up the process somewhat for.
Let me take that away. I don't think that we can discuss. We can't decide as A&G. We can't decide by email. I think we have to be sitting in person. Is my understanding. We can't do these things between meetings, but we can share the information and discuss it. And it's there's precedent for us having the council decision and then us subsequently the borrowing decision. So that should help. Thank you very much. And again, sorry for the difficult questions, but we look forward to seeing you back. Okay, item 11, Treasury Management Monitoring Update for Q3 2025-26 and Treasury Management Strategy 2026-27. It's nothing like getting onto the easy stuff for the evening.
Thank you, Chair. So this is a normal quarterly update, which starts with a brief economic update. And you'll probably be aware that back in December last year, the Bank of England reduced their base rate to 3.75%. And we're likely to see further cuts during the sort of course of 2026. As I said in the past at previous presentations, although the base rate is coming down, the rate in which we can actually borrow at via the PWLB is not following that course, and that's set out on table 2, which shows the divergence between the base rate dropping and the PWLB fairly static. It has come down in the last couple of weeks, but not significantly. So moving to table 3, this sets out the treasury management performance of the function, and we're currently forecasting an underspend of 1.1 million. And this is driven by higher investment income. So we've been able to take out some quite good short-term borrowing deals in advance of need, and we've been able to invest them. And because they're quite preferential rates, has also reduced our costs on the interest payable budget as well. Table 4 sets out the council's total short-term borrowing as at the end of December, which stood at just over 181 million. And table 5 is our long-term borrowing position at 247 million. And since the quarterly update back in September, we've been able to restructure the Phoenix Life loan, which is the very bottom loan on table 4. We've reduced the interest rate from 2.25 to 1.69. The amount will be repaid 10 years sooner, and it will save the council 4.7 million over the next 19 years. Table 6 is a new graphical representation taking on feedback from the Audit and Governance Committee and also the external auditor via their value for money assessment, which illustrates the council's debt position from April 2022 up to the end of December, and then overlays the DSG deficit increase, which is the red line. And what you'll see towards particularly this financial year, how much reliance we are now on short-term borrowing. It's got to the point where we will look to de-risk that at some point next financial year and take on some PWB debt, be it for 2 or 3 years, just to de-risk that, because it's becoming a point where it's almost unmanageable. Table 7 sets out the council's total investments, which are just over almost 73 million. Now moving on to Appendix 1 of the report, which is the Treasury Management Strategy for 26-27. Now the Treasury Management Strategy sets out how the authority will support its capital investment. So it's in the strategy, it sets out our capital plans and how we plan to fund that. And within that, it also sets out how we plan to fund that via borrowing. So there was a question earlier around how do we forecast debt. That is set out within the Treasury strategy for the next 3 years. It also sets out how we manage our day-to-day activity for Treasury management. So it sets out who we can invest with in terms of which banks, which risk ratings they hold, for how long we invest with those counterparties. It also sets out our borrowing limits, so what our total debt as an authority we can take on, and in what form of debt we can take on. And it also sets out our minimum revenue provision policy, which is essentially our plan to repay debt. So a key document, it's for the Audit and Governance to seek assurance of that document. Once it's been ratified tonight, it goes to full council and it makes up part of the budget report that will be presented to full council in February. So I'll stop there, Chair. Happily take any questions.
Thank you very much, and thank you for taking on board previous comments about the charts and the graphs. I found them helpful. They really help convey the information to me better. I'm not sure who went first. Councillor Waite, I'll go with you this time.
Thank you very much. I have a question about table 6, please. I'm just a little confused about something that you said, Matt, because I thought that I've been told in this committee previously that we are not allowed to borrow for against everyday spending, and it's not the word you use. I can't remember what it is you say. But then we were told, oh, actually, you can borrow if it's temporary. So we're going, well, the DSG, is that temporary? Is it okay? And it was all a bit of a fudge. But now, as this clearly, well, I don't know this, but the graph seems to indicate that the short-term borrowing is driven by the DSG deficit. So how can you legally convert that into long-term borrowing?
For you, Chair. So we can only borrow for capital purposes. That's clear. We cannot borrow to fund day-to-day revenue expenditure. If you turn to, I think it's page 326 of the report pack, which sets out the council's capital financing requirement. So that's okay. So page 326, there's a table at the very bottom of that page, which sets out the council's capital financing requirement. Okay, and that is effectively all the capital expenditure that's happened to year dot that has to be funded via borrowing, and effectively that's our limit that we go up to. Now, if we borrow over that limit, we are then technically borrowing for revenue purposes. That's a grey area that we have tested and challenged with government. We yet to have a real clarity in terms of what happens when we reach that point.
Councillor Tally.
Yeah, I'm glad you let Councillor Wake go first, because I had almost exactly the same question about the DSG and public. If we would, so to reiterate, Mr. Felmer, would a public works loan board be used to offset that borrowing for the DSG deficit? And if we do that, would that change it? As I understand it, the government may be taking on the DSG liability. Does that mean it will be taking on the retrospective interest payments that we've made for that? And if we were to set that off, would that make a difference?
So just to confirm, what we know is on the 1st of April 2028, the government will take responsibility for the day-to-day operational costs of the SEND high needs expenditure. Now that's almost as complete as the sentence that they give you. So we await the detail as to whether that's everything we're spending on that, and everything that's associated with that spending. So we await for clarification on that point. But what we know is on that date, the statutory instrument that allows us to ignore this deficit is going to fall away. So there needs to be a resolution by the 1st of April 2028 as to how these historic and accruing deficits will be dealt with. Because we know that, as I said earlier, if the government sent us a cheque for the current deficit, then next year you'd still be in a position where by the end of the year, your deficit is greater than your reserves. And then you've got another year to go. So it's that kind of issue about, are they going to give you, both support for the current deficit and what happens over that period of time to April 2028. So we do need to just wait for the government to give us that clarification before then we can advise as to exactly what the consequences will be of their adopted strategy, when they announce it. Well, what we know is the government are promising and have promised consistently to give us that detail. And, in the provisional local government settlement, they said they would announce it later in the settlement process. Now, I could read that. So I'll know by the first week of February, which is when normally I get the final local government finance settlement. But it didn't say the final local government settlement for 26-27. They said the final settlement, as part of the following settlement process. Well, we've just had a 3-year settlement process. So does that mean at the end of 3? So I'm just, I'm fed up of waiting. I just want the announcement, and have that clarity so we can then start planning as to how that needs to be dealt with on a financial planning perspective and a service perspective.
Councillor Andrews.
Yeah, I've got a query reference table 4 on page 351. We're borrowing money from a lot of borough councils and things like this. This is linked into local government reorganisation. When a lot of those are done away with and merged, made into unitaries, are they able to call in the loans? In fact, on one of them, the PCC for Hampshire, they're destined not to exist at all soon. So, what's going to happen? Presumably, they won't all call in the money, will they? The Police and Crime Commissioner for Hampshire, we're borrowing some money from that organisation, and that's not going to exist soon.
Through you, Chair, just through my experience of local government organisation, that loan that we owe that entity will transfer to a new entity. It will still be repayable by BCP Council based on the terms of that agreement at that point in time.
Thank you. I'm conscious that you did training for us on this not too long ago, and I feel like we all understand it and we're used to the way you present now. So I appreciate that. So I don't have any more questions for this one, but thanks again, and I appreciate the changes you made to the way it's presented. Any other questions on this item?
Shall we just quickly say well done for restructuring that loan and saving us some money? Thought someone should.
Yes, thank you. Good. Right. It is recommended that Audit and Governance Committee notes the reported activity of the Treasury Management function for the period ending 31st December 2025. Do we have consensus on that? Oh, and it is recommended that Audit and Governance Committee recommends that Council approves the Treasury Management Strategy 2026-27 in Appendix 1. I think we need a mover and a seconder for that. Councillor Waite, Councillor Walters, thank you very much. Do we have consensus? Thank you. Good. Moving on to item 12, risk management corporate risk register update. Thanks again for waiting to this stage of the meeting. Who is going to start off? Is it?
I will.
Thank you.
Thank you, Chair. Just to let you know, the author of this report, Fiona Manton, is unwell, so I'm not going to try and replicate what Fiona sometimes does for you guys and run through the report in some detail. What I am going to do is hand over to my colleague Kathy Hadley, who's the Corporate Director for Children and Young People, who's going to specifically talk about CRO2. In the report, some of the updates had to be delayed slightly because at the time Kathy had inspectors in, and she would like to update hot off the press, so to speak, around that risk. So if I hand over to Kathy in a sec, and then after Kathy, I would just like to try and address the issue that Lindy raised in the action plan around the old minute reference 24.
Thank you. Welcome, and thank you for your patience.
And thank you, Chair. I'm here, obviously, as Nigel said, specifically talking about CRO2. This is the risk regarding fail to achieve appropriate outcomes and quality of service for children and young people, and including a potential inadequate safeguarding. Now, there are two elements to this risk. Back in 2021, BCP Council had an inadequate rating for children's services, which in December 2024, we were re-inspected and we're now rated as good. So the risk was reconfigured, as you can see, re-matrixed against that. However, the other part of this risk is back in 2021, BCP had a what's called a written statement of action for failure for its SEND services. And so therefore that's the other element of this risk which continued. In 2023, there was a review of the work that had been done against the improvements that were required. And just for understanding for the committee, in the fact that this is a local area partnership inspection, it isn't, and review, it isn't just about BCP's services, it is also about health services and education services for those children and families with SEND. So in 2023, there was a DFE and CQC review, just a review of the services, and they were found to be the gaps still in the improvements. So they delivered a statutory direction to the partnership in 2023. And that's a statutory direction to improve by the Secretary of State. We then were assigned a DFE advisor who then chaired an improvement board, and we had quite a significant action plan that we were working to. We have, when it was asked for us to update this report, we were absolutely in the middle of a full local area partnership inspection against SEND. So I wasn't able to update it, and I will update you as much as I can at this point. We have received the draft report, Unfortunately, it's embargoed till the 2nd of February when Ofsted and CQC publish it. However, I will say that it confirms and clarifies the improvements that have been worked on during the period of time with the partners. And I would say that whilst there are things that we need to do, we're aware of those things as a partnership, and the tone of the report gives confidence. I can't give you the outcome, but the tone of the report gives confidence. So we are wanting to probably, once that's published, is to re-review the risk matrix and this particular risk in the correct trajectory, hopefully.
Thank you very much. That's really, really helpful. Did you want to come, should we discuss that risk item now, or do you want to make a short update on the other one? Let's just speak to that to that particular risk now. So this came up previously well, it's come up consistently in our discussions of risk register. One of my questions at a previous meeting was I can see the rationale for kind of merging all of the risks together into one kind of overarching risk. Do you think that, are you happy with that way of characterizing it? And our concern was just that, is there possible that there's details within that and slightly different work plans needed for the different parts of the risk, and are they being tracked acceptably?
And that's a very, very good question. And I guess on thinking about it in one area, a lot of the children who receive children's social care services also have EHCPs. And so sometimes you are kind of almost talking about the same children. However, the inspection process is looking at two different things that we deliver. All ultimately, are we safeguarding and are we providing a good or an adequate service to children and families? So I guess it's how you want to perceive those risks, really. But ultimately, it's about providing good services to residents and children and young people.
Did others want to come in? Councillor Tarling.
Yeah, thank you very much for that. And you've added so much more information in what you've just said there against it. Just on the risk report there's a list of significant actions there and some dates on there. One is to deliver on the education improvement plan in June of this year. Action 3. So this is page 441 of our reports. And then sufficient suitable accommodation available for our care experienced young people. Are those dates actually, do they fit with your expectation? So, you know, by the end of, well, the Q3, we'll be able to see some response on those actions.
Sorry, I'm just.
Yeah, apologies. 441 is on the report, which is the second page of the actions of the CRO, or third page, fourth page, fifth page.
Without seeing the dates off the top of my head, they will be dates that we have been working towards. It's fair to say that there's a very long partnership action plan that sits behind this, and there will be dates along there. It might be that we need to align those two dates.
I'd just say it doesn't mention this in that risk thing, as far as I could see, about the embargoed reports coming out. I would think you'd want to sort of take stock following that. You're obviously aware of aspects of it, but we are not. Once that's published, I would suggest we just review some of these action dates. So there's no point setting a date that doesn't work for you.
And any recommendations from that report will be put into that those actions, and so those actions may change too.
And I'd assume that would go to the overview and scrutiny committee, relevant, not A&G necessarily. We are looking at the risk here. You know, that's stepping on children's overview and scrutiny there, who will be doing that review.
And do you have a kind of map of the actions or the work plan needed to speak to each of the findings, whereas for the different risks? Are you confident that you've got a kind of plan of action that, if met, and if you proceed with that, that will speak to each of the components of the risk?
Yeah, absolutely. and currently that's overseen by the DFE and also CQC, and supported by some caseworkers in that arena, and reviewed, and so it is constantly under review. So yes, absolutely.
And final question for me: do you feel like you have everything you need to proceed with that work?
Yes, in terms of corporately and with system partners. I think the challenge is waiting for the SEND white paper and understanding the approach that will be needed there. And also, as my colleague has already talked about, in terms of the financial implications and the work towards that.
So we had an item on the action tracker for me to speak to the chair of the Children's ONS Scrutiny Committee, and we've arranged a meeting to take place later this month with the relevant officers to attend. And I think the steer was whether or not we should do some sort of specific meeting looking at where there's crossover between the two committees, just to be extra sure that there isn't something that should really fall under governance, make sure that nothing kind of falls between the cracks there. So I'd be keen on your input as to whether or not you think there would be any value in that. Or it may be the case that they've looked at this in enough detail already, and today has been very helpful for us. But that's something we've got a question to find out about. I think there'd be two parts of it. One of it would be speaking to this risk, and one of it would be on the DSG mitigation kind of plan.
Thank you, Chair. And it's become apparent to me there is a lot of conversation here about the DSG. The DSG, we do have a board that is stepping up to manage with partners, and so I think there is an overlap, and so I think it would be useful to ensure and give you confidence that we're managing across that piece.
Okay, that's been really helpful. Any other questions on that item? Shall we move on to the other risks that you wanted to speak to, Nigel?
Yeah, I was going to just reflect back on a comment right at the start of the meeting that Lindy made around minute reference number 24 that was apparently outstanding for quite some time. July 25, I think, was when we first made that. Jill, can you align the action to me, and I'll make sure that that is resolved. What I do think, however, is that on page 426 of our pack, in the quarter update of that CR20 item, there is a couple of paragraphs that do nod towards, because the question was, how is the risk portrayed to the public? So I think that tries to cover some of it there. I will ask the risk owner whether that is their attempt to explain what it is, or is there more to it, and I'll feed back accordingly to the committee.
Brilliant, thank you very much. I didn't have many other questions for this discussion of corporate risk register, especially in particular given that the paper writer is unwell today. So we've got one from the independent member, Lindy, joining online.
Thank you. I've just got one question on, I'm going to open it here. On page 403 on CR27, it looks like the comments have been quite stagnant. The first time this risk appeared was in March 2025. And then on page 404, it talks about mitigations in place and completed actions. So it's been the same, which is fine, the same comment for the last year. I just wanted to know, it says a cliff management strategy is being developed. Is that now developed and finalized? And then also on the target score is still the same as the initial gross and net risk scores of 16. So that one wasn't updated. It looks like the others have been updated to lower the target score. So thank you for that. So the last question on this one was on page 404. It says action 1, CMS risk register to be developed. So these 4 actions also come exactly like that from the March 25 report. And the deadline now was 31st of December. I just want some feedback on whether these actions have been implemented now that the deadline has passed. Thank you.
I don't know the detail to that question, independent member Lindy, so I'll take that away and perhaps give the answer in the that can be added to the minutes, or specifically send an email to the committee to explain that.
Thank you. So I think we will draw that item to a conclusion here, and please thank Fiona in her absence, but we will perhaps do a longer session on this at the next time the Corporate Risk Register comes to us. Right, do we have consensus to note the report? It's recommended members of Audit and Governance Committee note the update provided in this report relating to corporate risks. Do we have consensus? Great. Next item, Annual Governance Statement 2024-25 Action Plan Update and Annual Review of Local Code of Governance. I believe Ruth Hodges, are you presenting this one? Or no? Fair enough.
Yeah. Thank you, Chair. So this paper updates the committee on the action plan agreed as a result of last year's, that's the 24-25 annual governance statement, which the committee considered in July of 2025. You'll recall that the AGS is an embedded document within the statement of accounts. So accordingly, it forms part of the audit opinion and judgments of Grant Thornton that you heard earlier. You may also recall that the council identified 3 significant governance issues impacting the council, and this report at table 1 goes through each of those issues and provides an update on the action plan. And the shaded areas of that table are the summary of the issue that was presented to you in July. Ultimately, of course, the purpose of any action plan is to improve or resolve a situation for the better. And in this specific annual governance context, it's about a plan to result in the issue being removed from future year annual governance statements. So with that in mind, I'm just going to go through the 3 risks, the 3 issues. So the first issue, we've heard about it this evening, the DSG deficit. This remains a significant issue for the council and others. And despite complex discussions with the government and others, you've heard from Adam, the issue does require national as well as local solutions to fix it in the long term. So this issue is likely to remain on this year's, by the 25-26, annual governance statement. For issue 2, the DFE statutory direction in SEND, which Kathy has just talked to you about, the action plan has culminated in an improvement plan overseen by an improvement board, and the service was inspected, as you heard, in November, and their final report is due out on the 2nd of February, as Kathy explained. So the improvement plan will be revised as needed based on that published report, and the issue may or may not feature in the AGS for 25-26, depending on the outcome of that report. And then finally, for issue 3, mandatory training, we feel with a robust push in the final quarter from both officers and members that, and this is outlined on page 471, this issue may be able to be taken off the annual governance statement, but there is some work still to progress in the final quarter on that one. So through you, Chair, if there's any questions on this, I might draw other colleagues who are in the room or online on to comment.
Thank you. I found this helpful. Appreciate the setting out of the action since then. I don't have any comments at this point. Do any other members? Anyone online? And I noticed that the Chair of Standards Committee should be coming to the next meeting, so I think that might be a useful crossover with that third item. So with that in mind, let's recommend that members of the Audit and Governance Committee note the progress made to address the significant governance issues on the BCP Council AGS Action Plan 2024-25. Do we have consensus? Great. Item 14, Assurance Framework and Internal Audit Planning Consultation. And that's to you, Simon.
Thank you, Chair. Good evening, everyone. Thanks for staying on. I'll be guiding you through this important report on the Council's assurance framework and our internal audit plan approach for next year, 26-27. So the report aims to provide assurance that we are complying with the new global internal audit standards that came into place 1st of April 2025. And please note that this report follows a very detailed presentation to this committee back in November on how the internal audit plan is compiled, where you received lots of diagrams and details of how we actually determine individual audits. And it also explained back then that this is one of 2 key reports that come to you. This is the overall approach. A later report will come with more detail of individual audits and so forth. So, first part of the report provides an update on the Council's assurance framework. So key message on this, we've made some very minor changes to the framework itself, just added a few additional external assurance providers based on this information we obtained. So the key message the key change on this one is a new key assurance function that we've called ethics. This has been added in line with strengthened global internal audit around the audit universe, which has been explained again in previous presentations, which considers corporate priorities, organisation risks, government frameworks, and project risks, those types of things. And it's one of its main overall aims is to enable the head of internal audit, i.e. Nigel, to give an annual opinion on the governance, risk and control arrangements, which will come to the July committee later this year. So table after paragraph 21 shows the detail, shows all the days, how it's allocated across all the different functions, things like high risk, key assurance functions, key financial systems, along with other activities such as investigations. So the key message on this table is that the overall audit resource has been reduced by 220 days from last year. And this is a result of converting apprentice roles, 3 of those into 2 permanent auditor posts. And also we've replaced the audit manager on a part-time basis. And this is a positive thing because ultimately we've been unable to get more experienced and skilled officers providing assurance this year on this year's plan. So those reduction on days of 200 days approximately have been spread across those activities, you can see, to try and absorb it with minimal impact. So the plan does remain, as always, to be dynamic and flexible, enabling a rapid response to emerging risks and organisation change, and provide real-time assurance, as we have done in previous years. An overall view on our resourcing position consists of 13 full-time equivalent posts, and we also buy in external IT audit support for a small amount of resource. And important message is that we consider, in accordance with the standards, this resource is sufficient and adequately skilled to fulfil the internal audit mandate and deliver the proposed audit plan for next year. So in terms of consultation, please note we have consulted, in accordance with the standards, senior management in the form of statutory officers formally this year, and they're in agreement with the approach. So the next step following the agreement, hopefully at this meeting, we will further consult with corporate and service directors on the detail of the audits that will be carried out next year. And then we'll come back to this committee in March with that further detail. And I'd welcome any questions on the report. Thank you.
Thank you very much. Very clear. Very quick questions from me. Having apprentices obviously worked very well. Would you think about getting some more, building into for the future? And then the second is, should we take it that this is a good example to start thinking about what items we would like to put in the forward plan? Because then the next stage is discussing the forward plan for next year. So we should start thinking about it and our ideas, with the big caveat that that only feeds into your decision-making framework. It's not that whatever we want gets to the front of your queue.
Yes, thank you, Chair. Apprentices, absolutely massive success story for us. And yes, definitely in the future, as we have a succession planning arrangement now finally in place for some of us slightly maturing officers that may change. So definitely, as and when we need it, we definitely would do that. And we benefit from funding as well. And at the moment, those apprentices that have converted to auditor posts are undertaking further professional audit training as well. So again, it helps with our succession planning, hopefully becoming audit managers, deputy and ultimately chief internal auditors as it comes up. And in terms of items for next forward plan, yes, we definitely would welcome, as I've said, we're consulting with corporate directors, service directors on risk areas. So if there are any particular areas that members consider appropriate, we can build that into our audit planning process.
Councillor Tarling, then Councillor BC.
Just a statement. I want to say the table on Appendix A, I found very informative and very useful as a whole sort of overview of the process of what you do. So I found it very useful. Just thank you very much. Very informative.
Thank you for your comment.
Councillor Beasley.
Thank you, Chair. I think my question is broadly similar to that I made to the fire officer earlier. That is to ask, is the level of resources that you have sufficient to be able to deliver on your assurance requirements? And secondly, are you being put under pressure to cut headcount in terms of the budgetary process? I think they're both important questions for audit and governance, regardless of what you might feel about the budget.
Through the chair, thank you. Yes, as I've stated in the report, it's a standard that we actually state we've got sufficient resource, so I can say that, and that's based on several years now of BCP operating, so we have a good understanding of the level of risk across the organisation, and therefore the amount of resources allocated and we currently have is considered adequate to provide ultimately the chief internal auditor's annual opinion on that at the end of the year. In terms of pressure at the moment, there's no pressure in terms of cutting any resource.
And this might be one to take away. I know some organisations with the 3 lines of defence model, they have a specific risk function as the second line of defence. So maybe that's one to take away, but I'm just curious because the second line assurance is complicated. And I'm just keen on whether there's been discussion or appetite or anything to have a slightly different way of doing it, but I don't want to hold things up on that. It's a fairly big question, so perhaps we can talk about that offline. Okay, do we have any more questions on that item? Right, we need a mover and a seconder for this item. Councillor Tarling, Councillor Walters. It is recommended that Audit and Governance Committee A agrees the BCP assurance framework, B considers and comments on the proposed 26-27 audit plan approach, including high-level allocation of resource. C notes that the internal audit plan is delivered within the finance-based budget approved as part of the wider council's budget setting process. Do we have consensus on that? All in favour? Great. Item 15, internal audit quarterly audit plan update. Who's this?
Thank you, Chair. That's me. Thank you. You'll be pleased to know I intend to be very brief to go through the final report of the evening. So this is our standard quarterly audit plan update. I'll quickly draw your attention to a number of things, but obviously I'm very happy to take questions on any detail in the report. The first thing to note is of the 17 completed reports, we had no minimal assurance reports, but we did have 2 partial audit reports, which we've provided in a bit more detail to you in the report. And of those 2, we followed up recommendations on the first one, deprivation of liberty safeguards. Whilst they haven't hit the initial target date, they are due to be implemented in January and March. So hopefully by the next time we report to you, then there'll be some news that those have been implemented. And the second one, out of borough placements, we haven't, the timing is such that we haven't followed that one up yet, but the service did note in their response to it that they realised that this was urgent and intended to do it by the end of January. So there was some indication of intent to do that one quickly. In terms of amendments to the audit plan this quarter, I think the most important thing to note is the introduction of the Better Care Fund audit, which we're doing jointly with partners, which is the NHS and Dorset. It was felt that that was a really important one to get on there. There is a high risk on our internal audit plan, and working with partners we can get a sort of a deeper range of assurance and learning across from our partners as well on that one. At the last audit in Governance Committee, you asked us to provide some information on the oldest outstanding recommendations. So you'll see in the table on page 500 that there was one medium recommendation that's outstanding from 2023. And at the time of writing the reports, there was 4 highs and 7 mediums outstanding from 2024. I'm pleased to update you that since the time the report was written, we've now had assurance that the 4 housing ones have now been implemented. So that takes that down from 7 mediums down to 3 mediums outstanding. So there's progression on that one. Just a little bit of detail on the recommendations that are outstanding. The oldest ones, the oldest one is the risk management policy. And just the latest update is it is planned to bring that to the February committee with the update of policies and committee to this committee. The remaining recommendations, which is the 4 highs and 3 mediums, are in the planning service relating to developer contributions. The director has provided some more information on why those are taking so long to implement. And this was identification that they needed existing resource to be able to implement it, which took time in itself to approve, and an unsuccessful recruitment process. That's now being undertaken again, with the hope it will be successful this time. And that was combined with the implementation of the MasterGov system and staff time spending on resolving post-implementation reviews. So that's the latest update on that one. We are due to undertake an audit again in that area this quarter, so we will pick up a more detailed review of those recommendations to see if, given the passage of time since those have been recommended, the new MasterGov system, among other changes, whether those are all still relevant, but the service does recognise that there is still work to do and intends to implement those recommendations. And of the other recommendations that are reported, the ones that the longest outstanding are the Children's Services Fire Safety recommendations. Those outstanding at the time we followed up, but we've received further assurance today that there is progress being made. The reconciliation has now been completed, and there's 2 property only, or I say only, but 2 properties remaining to get a fire safety officer in place. So work is progressing, although slower than hoped on that one. So I'm very happy to take any questions on any other aspects of the report.
Thank you very much. That was really clear, and I really appreciated those updates from the directors. I thought that was very helpful. Do any other members have any questions coming in? Nope. I had one. My main concern that jumped out was the partial audit on out of borough placements of children, and I was wondering if the appropriate place to look into that more might be if we did that session on children's on the risk related to children. The director, Kath, seemed quite supportive of the idea of us doing something joint, and I wonder if maybe that might be the place to make sure that that audit is followed up as part of that. If I'm assuming others agree, we put that on the action tracker just to follow that particular partial audit. I know we don't usually do follow-ups on partial audits, but I think given its nature, keen to make sure we look at it further. Councillor Beasley.
I certainly support that, Chair, but can we make sure that when we do get to that point that we've got sufficient financial information to properly understand the position, because it is complicated, it is expensive, and I think members, we want to try and head off obvious questions if we can before we begin the meeting.
Thank you very much. With that, I think we're kind of used to seeing these reports now, and when they're familiar, you sort of they read easier. Right, this one needs. Do I need to read this one out? It's just to note the recommendations are set out in the agenda. Right. Yeah. Consensus for that. Thank you very much. Right, we have item 16 is the appointment of members to the Constitution Review Working Group. So this after Councillor Phipps decided to step down from that working group, Councillor Waite kindly expressed an interest. You actually attended the last working group meeting, but this is just for the committee to give that formal confirmation of your appointment to that working group.
Happy to propose.
Happy to second. All in favour? Agreed. Good. And then the forward plan. I mean, for this one, can I propose that we? Does this need to be approved? I presume we can by consensus because it's only for the next 2 meetings, isn't it? And then we're going to be just considering items for the following year. So
My only comment about the forward plan is, as we only got 2 more columns there, whether perhaps we need to add some columns for the next council year.
yes, so we have to produce the next year's forward plan at the meeting after next. We would approve that full year plan. So this is just a request for members to start thinking about items that they think should be on that agenda for next year. So on that note, shall we seek consensus for that item? Okay, with that in mind, thank you everyone. Finishing at 10 o'clock. It's been worse, hasn't it? And thank you to those joining online and at home. Thank you. Bye bye now.